What's up, everybody? Good morning. Welcome to the stream. Get some love from over there in the Zoom world, those of you. Don't forget to head over to the YouTube channel. We've had explosive growth. It's crazy. Head over there, leave a comment, hit the like button. You guys know the drill. We'll keep doing that as long as numbers keep growing. Still get over my cold, but we're back. What the heck? What caused that yoink? Yeah, no, I'm sitting here as I'm talking, watching the market around here. What do we got going on? Trump talking about watching post story about tariffs. You guys remember we're back to trading Trump market. You guys remember if y'all had that privilege? You guys had that privilege back a while ago. You gotta remember. The man's Twitter is a catalyst. You got to keep that in mind. So a little bit of commentary there. Let me give him a little bit more. Let me get the bands in here. Add selected. Let's go here. Double check my risk interval. This every morning. Make sure the number is still the same. 41.75. Dude, so I threw my back out yesterday moving shit around in the garage. I was trying to basically we have a freeze coming and we got to get both of our cars in the garage. And I twisted the wrong way. You ever had that happen? You just twist the wrong way. Oh, it's the worst. Okay. Trump reportedly considering important alteration to tariff plans. Yada, yada, yada. So this is what it was like back in the day. Fed's Cook is speaking. So, Trump would say something. Yeah, we're very sensitive to the Fed as well. And you guys remember from the class. Oops. You remember from our class on Triple B. Were you guys there for the free class? Especially if you were there. You guys know the drill. VIX is above this very number this month at 1654. What do you remember about that? Market is very sensitive to everything. News, catalyst, little emo. So hopefully you guys are doing all right. There's a freeze down here in Texas, which means there's a freeze everywhere else. So hopefully you guys are doing good, navigating through the ice and snow. All right, let's see what we got going on. 7 minutes till market opens. Pre-market, we've run up to the DD bands. You know how this goes. 4% of days, love above. 8% of days, love below. 88% of days, love in the middle. The market's pulling back to the middle, give it some movability. We warded off what looked like could be a potential crash as the market was building up abnormal volatility. Friday, we recovered and we broke outside DD bands. There was a no trade scenario and here I didn't do much. This could be something similar, but we'll see. Like I said, I do small positions only outside of the green bands. Nasdaq also tapping its bands, predictable high volume pivot. Our pivots are that good. Right on the dot. Distance for that green band is 41.75 on ES on the close of the previous day. And you can just see how we're just running right up to it. That's how good our bands are. It's okay out there. It feels colder. I woke up with my throat hurting again. I'm like, oh shit, I'm gonna get sick a second time. Can't have that happen. We need to do the lifetime giveaway, don't we? I forgot about that. All right. This will be fun. Right. What's up, you guys? Is MSTR on Rocket Scooter? So we have to expand our ticker list, out more tickers. Unfortunately, being the holidays, a lot of our development team is out, and not or working like slow roll, so not like full time until like one more week from now. We get a couple changes in, so we're gonna try to get MSTR and other stocks in there for you guys. Essentially, we're creating a dynamic ticker list, which will allow us to have any ticker that you enter that we don't natively have there, to be pulled in the next data pool. Right now, it's like a set ticker list. It doesn't have MSTR on it, so we'll have to create a dynamic one. What's up, guys? Good morning. 2 minutes till market opens. 2 minutes till market opens. Man, that market moved pretty quick on that and bounced right back up. That's the move I was hoping to see during market open. Okay, so just so you guys know, DD bands, if you want to write them down really quick. The platform will give them to you, but it's 21,650 on NASDAQ and right about 6013 on the S&P. That's also that anchor point from that event that one day. Most days will close inside of the bands. Like I said, so above the upper band, I usually only trade small and I do long only. I don't try to fade it. So we'll see what we get. I was thinking about grabbing that dip, but market's about to open. So let's see what the stocks come out of being. Remember, one of the key things to take away that I taught you guys the other day is that we are still trading above this triple B on VIX. The market's still gonna have overshooting pivots and be volatile, so be very careful. I think today still tries to trickle higher. I've got about a 60, 68 target on the S&P to fill. So that's, we'll see if we get that. Video's breaking out. Shorting Trump. I don't know. 2 of our 3 greater market signals slipped over to being bullish as of yesterday, or as of Friday. So normally that 3 out of 3 went bearish. That one day we had the FOMC crash, which I was like, okay, that's the first time in 2 years I've actually said the word I'm bearish for a little bit. And then Friday we came back in and things were slightly better. All right, so the market came out pretty good. All right, so we get the liquidity maps come through. Outside the band, this is the percent of days that close outside of these range. So this is actual stats from our back test. 4% of days will stay outside the band. 88% of days will stay somewhere in the middle. And 8% of days will close below. So these are the worst drawn percent signs in the history of mathematics, but bear with me. How come you can't find VIX anywhere else besides Thinkorswim? Because VIX and a couple other things are like completely different. VX is owned by CBOT or CBOE. It's outside the CME Group's purview. Volatility futures is a CBOE thing. So usually you have to go out and get a very special data feed just for VIX futures. We have it here. Well, actually, no, I'm sorry. We don't have it here. I don't think. Do we? I don't think we have it. Yeah, we don't go get it. Well, let's see. I don't know. Let me double check. F.us.vxh25. VX. Let's see if we have it. Yeah, we don't have it. I didn't think we did. So Thinkorswim just has everything. That's kind of why. All right, let's get our liquidity maps front center and see what we got. Is there a long setup today? Is there short setups? Okay, good. Okay, so this is the things we're going to look at today. All right, so if you guys look off on my screen here, you see the liquidity maps. You can see over here, there's bullish setup off of MHP, which is decent. But keep in mind, the MHP is also where the DD band is. So let's go ahead and remember, I'll take a little green marker here. DD band. Okay. I'm get my resilience numbers here. I don't know why I didn't show up there. Put that there. Put that there. There. Okay, so all of these signs are decent for a good bull run. Continual bull run. So the white number is greater than 0 S&P, so we have support right inside of there. That's also the 1B setup off of MHP. The 1A supports on positive res greater than 0. Can push higher, but again, there's nothing really to trade to when we're outside of these bands. I don't really do much. I try to look for setups to downside of here. So this is about 15 points lower. There is a scalp back up to the upside. I don't think I'll be shorting this today. This is a clear as day bull reversal setup, which I do like. The only thing I do on the short side is if you lose this. So anytime I do 3 slashes, if you break there, it's bad. Now, typically that'll be forecast by res less than 0, which we don't have. Market's nice and like so. This is a low probability event. So today, just a push and go, which I do like. So today, liquidity map shows upward pressure on S&P, which is good. Again, outside of the bands, I don't really aggressively trade this, and I hate when most of the market move takes place pre-market. Sometimes when you engage a trade like this, you just literally sit there all day with your money on the table. So ideally, I'd like to get a really good dip. Nasdaq the same. There's good support and setup there off of hedge pressure and monthly hedge pressure. So here to here's a trade, here to here's a trade. Tons of good eats on Nasdaq in case there is some kind of a flush. Usually what I wait outside the bands, and like I'm kind of like famous for doing this, is I don't chase longs. I let the market try to do something, and then I catch that reversal back up. So like if today, market's trickling around, and all of a sudden there's like a quick dip or a quick sell or whatever, and we reclaim here, that's my entry point for the bigger run up. That's kind of what you want to see when the market moves up this far, this fast pre-market. It's not a gap and go. Wait, what are you saying? Good morning. Good morning. What's up, fam? So yeah, if a gap and go is pretty much the setup here. So it's a gap and go. Res greater than 0 is that gap and go scenario. The problem is that we don't really have upper targets outside of here to go to. The exception of the S&P does have a red line, and Nasdaq does have a red line, very close at 12,806. Let's put Nasdaq futures here. So 12,806 on futures is that Nasdaq first pivot that we're going to see, which is literally right here. I'm going to draw 806, 806. That's the pivot. Red line, IRL. So, and we know that here we have, where's that band? line is there. And the band is here. Monthly Mac looks way better, yeah. Where's my Nasdaq band? There. Okay. Let's look at the monthly maps on SPY. Do greater market. We always do this every single morning. Greater market DD ratio. So we do over here. Greater market is greater market. 1 DD greater than half. So we're bullish again. That's great on stocks. Number 2, SPY greater than MHP. That's great. And then number 3, monthly map seemed to have recovered after yesterday's move. So as you see right now, we're back to bull zone strengthening, bear zone weakening. So bull market is back, full bull market. All 3 of them are great. Up, up, and up. So welcome back, bull market. We missed you. It's been like 10 days, which is good. You guys are happy to hear that. We love bull markets here. So no shorting this one today. That's good. That's very good. You can't argue with that. So you guys remember when y'all been kind of hanging out with us, learning in the mornings, this is the perfect monthly map. You want to see this kind of layout through February. That's beautiful. So this is great and bullish. The market's done selling. Okay. So any dips, I'm be looking to buy, which is what I like to see. Now let's get a dip. I hate chasing highs, so I'm gonna see if I can't get any kind of pullback to push long on. Let's find yourself a good dip. All right, resilience greater than 0. Buying at the open is not a terrible spot to trade off of here. But Nasdaq is hitting his first resistance at 806. Targets today would be 60.68 on the S&P. And QQQ equivalent target would be, hold on, let me find it. 60.68 yellow line. We always talk about those. And QQQ would be 21, or sorry, Nasdaq. Here's the targets, upper targets, 21, 877 red line on Q is the second one, and then 60.68 on ES. So these are the levels I'm looking for today. Again, if I get a nice long setup, I will. Outside the band is small trades only. Under the band, I'll get a medium trade. So kind of what I want to see is that this just pull back just a tiny little bit. I'd like to get a nice little long up to my 60.68 target. I'd like for this market to try to pretend to flush out some of the bulls, get them scared again, and I'd love to grab a nice little dip to shock move to the upside. 877 is the next. 21, 877. All right, these are impact and run like red lines from previous moves up. So I just got over being sick, and I feel like I'm getting slightly sick again. We got a freeze going on. So who here, your house is frozen right now? Because if it's freezing down in Houston, it's got to be like a million degrees below zero everywhere else. Now in 5 minutes, we got the service PMI coming out. It's going to be a pretty solid event, kind of keep the market moving. Look at that really quickly. And the sectors today, they're doing strong. I mean, everything's doing great today. Everything's gap and go. It's looking good. Services PMI has kind of been on the improvement, which is good. Anything above 50 is good. And we've been pushing higher and higher and higher. So any bad news, the market's gonna be sensitive to catalyst. So this doesn't come in, screaming higher than 50, or if it comes closer to 50 or kind of worse than expected, you can probably get a nice little dip off of that. That's what I'm hoping to see. The market's structured bullish. I want to see a dip. News comes out, dip, get back in on the long. That'd be nice to write off with. So remember, the S&P today, About a 15-point drop to monthly hedge pressure support. QQQ. Let's see, it's right about here, about 522.5. So that is about 100 points lower for that support. It's cold as hell. 14. Oh my god. Go check USO. Yeah. Hold on. Market's going up. Bull market back, baby. Bull market is back. It's back. It's back. Didn't take long at all. Of all things, all three greater market signals are bullish. Can't hate that. 3 out of 3 is bullish. I'm extremely bullish. Where can I long from today? USO, nice bull support at 78 on oil. So if everything dips today, there's nice supports across the board. 8 degrees. Ugh. That's crazy. We're like at 32 degrees, like right on the dot. It's snow in St. Louis. Oh, nice. Okay. So I need to get, like I said, I don't chase longs, but I'm definitely long minded. So I need to find a good entry point. When the news comes out, I'm going to take a trade. I'll let it do that. So I'm looking for is any kind of support inside of here. Keep in mind that today's DD band is right there. I only trade small above that band, so I'm going to take in small longs off of MHP today. On any dip we get. It'd be hard to think that we get 2 dips in a row, though, because we had that dip pre-market, which is that dip that you'd like to see during PMI. Ooh, my back hurts. So basically threw my back out. I was working in the garage this weekend, like trying to prep for the freeze. I kind of got this like, okay, we need to get both cars in the garage. I'm finally doing, garage manifest destiny, which was like, I want to go floor to floor from one side to the other, nothing on the floor. Finally get everything put up since we moved into the new house. This massive garage, tons of space, but like just never really, because I had the flu, so I never really sat down and did anything. And it was funny because I didn't even lift anything heavy. I bought these totes, these like, I don't know, they weighed like maybe like less than, I don't know, 6-7 pounds each, empty totes, grabbing them from the car, and I just turned them this way to pull them out. Like I just did that, lifting no weight, and then I like literally threw my back out. It was crazy. So I've been hobbling around all day. Every time I move, you might hear me in a second go, ah. That's what that's all about. Okay. Nice, clean, easy market today. All right, news in 2 minutes. Let the news. Okay. See? I got the protection message on my screen again, and it doesn't let me select cancel. That's the thing I hate about this. Trying to do this. So the OLED thing turned on again. It somehow likes to do it at exactly when the stream starts, and there's no timer for me to turn off. So OLED monitors are a pain in the fucking ass. I'm gonna tell you. You want brighter reds and blacker blacks? Go get yourself an OLED monitor and then have it ask you every 16 hours once you go through a pixel cleaning thing, where it shuts off. Oh my God. I'm in Houston. I'm not in San Antonio. Hold on one second, guys. If you got low backability on YouTube, you can fix your back. Okay, I'll check it out. I'm going to try to do a trick to have it do the monitor cleaning when I'm on standby. So right now my monitor will turn off again for 10 minutes while this whole pixel cleaning thing. So I have to stare at my encoder over here. I can still see the screen, but I don't have a screen. All right, letting this market move around. We have the news just came out, I think. Let's take a look. Wait a minute. Yeah, nice pull up. Looks like the services PMI came in right about 56. Didn't beat expectations, came in under, but still 56 is great. I don't think the market's going to pull back on that. I think we're going to just have a nice clean bull day going slightly higher. No downside I can see today. So this is just a trickle up market. Bull market's back. And again, a movement like this, I need a good dip to buy. So I'm just going to wait patiently until I get a good one. I don't like chasing greens at the top. So we'll see what we get. 21,877 is the upper target that I have for NASDAQ. And then I have 6068 is the upper target I have for S&P futures. What's up, Tab? How's it going, man? Nice. Bull market back. Greater market's good and bullish. I love it. The bear scare gone away. So here, anybody else here in Texas? How you loving your freeze right now? It's not something we get too often, right? Last time we had a crazy freeze, and I'm talking like crazy freeze. I know, like maybe, let's see, 4 years ago, maybe 20. It was before COVID, I think. It was so bad the power went out across the city. The freeze was such a huge thing. People died in the freeze. That's how bad it was. So, you know, when they say freeze, there's a freeze coming. Everyone gets crazy. You know, go to Costco, you go to Walmart, the lines are through the door. Everybody's buying like last minute generators and toilet paper and bottled water. Texas don't play when it comes to like thoughts of a natural disaster. People go crazy down here. But yeah, the last freeze, the power grid got overwhelmed by everybody, like, you know, for whatever reason. It's a huge thing. I think like the guy that was like the head of Centerpoint running power, whoever's in charge, there's a huge fiasco down here, got fired. I mean, there's a whole big deal. The power was going out like hospitals and retirement homes and stuff, and people weren't getting the care they needed. I mean, it was an infrastructure nightmare down here in H-Town. You in H-Town? Let's go. You get power outages from heat waves in Australia? Oh, no way. Yeah, like here, because everybody just like flips their heater on all at the same time, and the power grid just goes like wobbly. Let's see. We need a good entry today. You know what I'd like to see? Like 1 solid hour of just red candle, like a solid red candle to grab a dip on. That'd be lovely. 60-50 S&P, my upper target 60-68. The R&R is not super big on that, as the lower DD band is kind of that target I look for. 60-12 to be support. So my reward is just higher than my risk. My brain wants to long, but does not want to chase long. So you guys always see me do. I had to wait patiently all day and grab that dip. Dips are good. Dips are back on to buy. No selling off today, but I'd like to see a scary red candle. Squeeze out some bulls really quick, and I'll be the first one in on the bull run. Back up. So we are good. We're good on the bull case today. Market's looking solid today. We're worth at 22 right now. Damn, that's crazy. So I'm waiting for my monitor to get back to turning back on. What I'm going to see if it can't do is it can't trigger the OLED cleaning cycle whenever the monitor is on standby, so we can do it while I sleep. It is the stupidest thing to have a timer for 16 hours. Think about it. 16 hours of inactivity, it cleans the monitor. So say that you started working at 8 and you end at 5. 16 hours later is 8. It was to clean your monitor the minute you come back to. Who thought of a 16-hour cycle? This is the weirdest thing in the world. Why not make it 4-hour cycle? Why not make it 8-hour cycle? Doesn't make any sense. Like if I end at the end of the day and leave my computer, literally at 8 in the morning, it's like, oh, let me turn your monitor off for 5 minutes. Wait, what? OLEDs are weird and you cannot bypass them. I want the setting that I don't care. I have money. I'll just buy another one. Let me ruin my OLED pixels. But whatever. It's the new quantum dot OLEDs from Sony. They're crazy. Do I notice a difference? I mean, I guess I notice a difference. The reds are extremely, like, almost like unbearably red. Like you can't even watch. You can't play a game that has red in it. I had to turn off all the HDR, all the OLED crazy settings to just go back to like standard RGB because it is way too. It's like everything is red. It's crazy. Everybody get back in here. Get back in here. All right, so here we go. I'm looking for a, let's see, these are gap fills. This SPY has a gap to fill at 61,053 as well. The upper gap fill is there. There's the yellow line at 60.68 on S&P futures. There's a lot of good upside limit potential here. You guys know me, the rules I have is I don't trade outside of DD bands. I let the market dip and then I get myself a nice little run up. Market nice and strong and bullish. So last thing I do is chase a high. Anything outside of these green bands, I'll trade with a small position anyways. 1 to 2 contracts only. Only 4% of days close outside of the band. 96% of days close below the upper. So that's what we're looking for. Cleaning complete. So whatever's weird about this like monitor cycle, it's like 16 hours. It goes into some mode that says execute and cancel. It doesn't let you cancel. It's so weird here. Like somebody right now showed the same thing. MSI OLED care. It's like this. And you can't click cancel. I see this pops up on my screen. If I don't do anything, it works on its own anyways. So what I should probably do is just turn the monitor off and back on. But the cycle, you can change it to every 16 hours, which is the weirdest thing. After 16 hours of inactivity, it will do it. Why? Why 16 hours? Now, I was telling people this earlier. Or if you work from like 9 to 5 and then you stop working, then 16 hours later, you know, it's like you're back at the start or whenever. So say that you're like 9 until your computer, you're playing games, you're doing whatever, and then you stop at like 9, okay? Right? It's going to interrupt your workday. So why don't they make it 8 hours later? That would be kind of cool. But there's somebody was saying like there's a hack where you can set it to where like it automatically goes off when your monitor's on standby. So I go to my Windows settings and force my monitor to go to standby after like 5 minutes, and we'll see what happens. Anyways, close execute on the task manager. It's not on the PC. It's in the monitor hardware. You don't get that pop-up? Yeah, so like I went with I might take this one back and get a different brand. Like MSI is a Sony screen. And then like Sony and LG are the only two companies that make OLEDs. So all your monitors, no matter if it's like Acer or Asus or whatever, is going to either be a Sony or an LG screen. So I went with one of the with Sony, so I can have a quantum dot OLED. As fun as it's been, I might take it back and just go get a regular OLED without the nonsense. But like every individual pixel has a backlight on it. That's the thing with OLEDs, which means you can get really rich blacks on the screen, really bright brights. No, Sony or LG. Did I say Samsung? I meant Sony or LG. My bad. There's two companies. Sorry. Oh, I keep saying it backwards. Samsung and LG. Why was I saying Sony? Sony. Sony. I have soft fog brain. LG and Sony. Why was I? Did I say Samsung? So LG and Sony. So every screen that you buy that is an OLED is going to be manufactured by one of those companies, and then they just put their label on it and their hardware on it. Welcome back to the stream, you guys. All right. So my upper targets here on the Nasdaq, which I'd like to see. Now I'm not shorting this either because the greater market came back to being bullish. So the greater market's good. Where are all my do some red lines up here. All right, my upper target 877. So I'd like to see what I'd like to see happen today. It's a nice little pop to there. And then something down in here, and I'd like to get a move up. I'd like to see, like, we're near the extendable part of the range. So I'd like to see some kind of event or some kind of bounce to actually get into a good long on. I hate when pre-market the majority of the move happens and you open outside these bands. I don't normally take trades outside of here. If I do, they're small. I need a good strong pivot, but we don't have any really good strong pivots to trade off of. So the market's just trickling higher, and you guys know me. I wait for a good setup. But all setups are good today. Market's nice and long. Resilience is good. The greater market is good. Bull market's back. I like it. So, you know, it's like I wait for everything to come back clean. Greater market, all three of the signs we look at are bullish. TD is bullish. SPY is above MHP, which is good for the month. The monthly map, surprisingly, cleaned themselves out today, which is good. Monthly map is bullish, which is good. Number 4, which you talked about in the class, if you guys came, VIX is still above, or VIX right now, sorry, below triple B. So the market's going to be less sensitive to catalysts, less overshooting of pivots, which is great. So any quick selling that hits my pivots, I'm right along at the pivot. I'm not expecting overshoots or choppy market anymore. It's going to be nice and clean. So if we get a flush out day, that would be great. As a quick dive anywhere. But other than that, the market is going to push higher. No shorting today for me at all. Yeah, I'm only going to long off of a really good, strong, long pivot. Triple B is 1654 today. So that's the contango midpoint on VIX, which is a gauge of how the market's going to move. Today's S&P upper target, I'm telling you guys what I'm looking for, is 6068. That's today's run up, which is just about right here. And the reason I'm not taking it is just because it's so close. I like the R&R to be pretty good. I hate when the market just opens like right there. Do we have MMQ, MES? Yeah, we have both. You can do both. 68 is still about 15 points higher. So if I were to guess today, what I really would like to see happen is this push to here. Market try to do anything. Looks like the equilibrium is about right there. And then pick up some steam. And then decide what it's going to do. Either keep going or not go towards the end of the day. So I'm expecting something like this, with the desire to go up on the greater market. So I'm looking for this kind of move right there. We're just kind of right in the middle here. So I'm waiting to get that good setup. It's yellow, so it's a yellow line. Real liquidity. Yellow line. It's from the table. You went to the class, right? It's right here. So it's calculated from a pivot from, let's see, what day was that from? So wait, you guys know what the yellow lines are, right? Y'all want another blow your mind session here? I need to figure my monitor out for reals. Okay. So we have a technique that when the market moves on an event, let me just clean this up real quick. Market moves on an event way back here, this Tuesday, a month ago, creates a certain thing. We tell you what to look for, and then we tell you to mark a distance from that starting point. And the distance is in that table in Rocket Scooter. So 6068 was generated here. And let me show you how amazing this is, because, you know, these pivots are like rock solid high volume pivots. During session, whenever you're trading and you bump up against the yellow line, it's always a predictable high volume pivot, and it's out of bounds. So when you go into all-time highs, this is a way to forecast pivots and all-time highs that you've never achieved before, which is amazing. I'm going to show you when you touch these pivots, they just have volume here. Look at this. And this is projected a month in advance. Look when you get right up close to it. The overnight session, right? Actually, this was in the afternoon session. Look at this right here. Look at how much volume came out on that. This is 15,000 contracts versus the 5,000 on that 5-minute candle right here. The volume spikes up pretty crazily. Pivoting here on the overnight, pivoting there. And it's just like, it's a really interesting key pivot point. Here's the breakthrough of it. Look in the overnight relative to what you have in the surroundings. It is a predictable high volume pivot at all-time highs. So at all-time highs, we can forecast even like what do you guys use? Support and resistance? How do you forecast a pivot point at all-time highs? And we have a technique to do that as well. It has to do with another CME group thing that we exploit. The FOMC collapsed off of that pivot. And again, 6068 back over here, same pivot. There's that pivoting off of it overnight. It lasts for a very long time. The pivot is always going to be there. Right? So there it is. There's the previous one right here, 5970. You can see we're playing ping pong off of these bigger pivots. So these are bigger run pivots off of bigger balancing acts in the market. So when we get here, you know, you can expect this is like the next decision point of the market. Right when we get here is the next big decision point. The technique we teach in our classes is one of the best techniques you're going to learn for futures, because whenever you start off with days like this, where's your next pivot point? And that's what we use when we're out of balance, basically. Yep. So lifetime giveaway. Yes, if you are in the monthly program, which means you can sign up now. We're going to do a drawing of anybody in the monthly program, and you'll get, we're giving out one lifetime today. We're going to give out a couple, but one today for sure. So all you have to do is sign up. The link that just posted in the chat, 90% off. I'm sorry, not 80% off. Scroll up, 50% off our first month. As long as you're in the trial, you even qualify. So it's $4,000 value. I'm going to hedge your bets for $100. Enter that contest. So by the way, we have codes for Elite Trader Funding. We have codes for Tradeify. We have codes for Apex now. So you guys out there trading all these trader funding programs, make sure to use our code and our link. If you're already a member on the monthly, no, everybody that's a monthly member can enter. Probably a 1 in 50 shot. Oh, no. No. Probably like 1 in 1,000 shot. Oh, I'm sorry. Monthly subscribers? It's 1 in thousands. Yeah. You mean for the lifetime giveaway? It's like 1 in thousands. Many thousands. But still. So it's still a giveaway. No trades today. I have rules outside of the band. I only trade long and small. But there's no pivot to trade off of. So what I'm waiting for is for a reaction off of 60.68 right here. And I'm going to let the market try to hopefully pull back and support somewhere. And then I can get back in on a long. Here's where the equilibrium is pushing. We're too high above my entry point. So I don't chase longs. I'm going to let it trickle around. I'm waiting for the pullback to get back in on the long. Oh, not people on the stream. So anybody that's a monthly member. Yeah. Oh, but if you're not, oh, I see what you're saying. But if you're not in the stream, okay, yeah. If you're not in the stream, you can't win. So that's another thing too. You have to be here. And so yeah, I guess that does change it probably drastically. We're gonna draw a name. If you're not in the stream, we're gonna draw another name. Yeah, so the greater market's back. All three signs are bullish. Things are great. I do have some pretty good, strong, long setups that I can take off of S&P monthly hedge pressure if we pull back. I'd love to see a pullback. MHP is a nice, strong 595 supported SPY. QQQ definitely has a 522 and 520 setup to support as well. The ideal trade today is supporting from there to there, there to there. So if there is any kind of pullback, I'm going to build my big long to go back up. I've never used Tradeify, but I know Brett, and you know everyone seems to love them, so we're gonna find out. So guess what? I'm starting a podcast. I'll tell you guys about the podcast. I'm starting with Minx. I don't know if you guys know her. It's Matt and Minx. We're still coming up with the name. Financial Joe Rogan. Yeah. So it's going to be the best futures talk show, period. Futures everything. Between Minx and I know everybody in the funding industry. It's going to be a podcast about trader funding programs and futures. We're going to get every CEO from every one of those companies in on this podcast. Okay, hold on. I'm going to write this down really quick. Hold on 1 second. So, Meeks and I texting all weekend about this crazy idea that we have, which we think the futures industry needs so bad. A futures themed podcast where between her and I, we know everybody in this industry. I know CEOs of all the big companies. She knows CEOs of all the big companies. Overlapping, we know everybody. From all the trader funding programs to all the futures brokers to everything. And our goal is to get people from the futures industry, big names, to come and talk to you guys. You have questions for, I don't know, Apex. We'll bring the CEO on there. Ask them the questions you want to ask. Get them to talk about the things they want to talk about. Changes, rule changes, funding changes, all that stuff. We're in with everybody. And so we put out some feelers over the weekend, and everybody we talked to thought it was an amazing idea. We're already scheduling who's going to come on and win. Talk show. So we're probably gonna do it on Twitter Spaces for now, but we're still kind of talking about the format. But the idea is we'll have a sit down with a bunch of people showing up on the panel, futures traders, but mostly each day it's going to be like live futures trading, but we'll have a special guest on and bring them on, and we'll have 30 minutes with so-and-so, CEO of this funding company, let them talk about whatever it is they're doing. So the idea is we're just going to sit there and kind of, all things futures, right? She runs a big futures community. The Traders Wealth Lounge, obviously we run Rocket Scooter. Yeah, she's great. I've done so much podcasts and spaces and stuff alongside her. She's really good. And the idea is that we sit there and we're like, everybody wants to know all these things. There's all these rumors flying around. There's all this information that people are passing. So-and-so denied my payout. So-and-so changed their rules. So-and-so's platform isn't working yesterday. Everybody's talking about TopStep's platform not working. Well, these CEOs don't necessarily have a forum to reach a broader audience other than their own forum. And so like as a neutral kind of journalist in that particular fashion, we could have someone come on and talk about, oh yeah, so these are the updates we're pushing. These are the new rules we're going to do, something like that. And just, we can interview them and grill them and talk about the industry and talk about the industry changes. I mean, a lot of you guys rely on trader funding programs to go forward. The industry itself is rapidly changing. So we want to create that forum that you guys have a place to be on the front of all of that. As most of the big trader funding programs are trying to move away from sim to funded model, we'd like to keep you guys in the loop. That's the idea. Rocket fuel or scooter insights of the rocket room. Well, it's going to be like agnostic when it comes to like the brand of it. We're not making it a rocket scooter thing. We're making it a Matt and Minx thing. So we're going to call it something with the word futures in it or something, something that's really just kind of neutral. It's not for us to promote our brands. It's for us to kind of just be, aside from rocket scooter, you guys know, y'all have seen me on, I've been on so many shows. I've spoken at symposiums. I've been on a podcast with every big name trader out there. So as Matt, but not as Rocket Scooter. Like I don't go out there and start plugging Rocket Scooter on these shows. I go out there as Matt the Trader and just rap about whatever. Back to the Future. That's what I was like making jokes. They call it Back to the Futures or something. Yeah. Anyways, really excited to roll that out, and we're like I said, we've been chatting about it all weekend. We're gonna launch it sooner rather than later, so I don't know when we're gonna do it or how it's gonna work out. Futures Outlook or Futures Edge, yeah, something with like future. But it's gonna, essentially the idea is we get people on, we rap about whatever it is they're doing. Some of our friends started prop firms, the idea is let's get them on here and chat with them. Let you guys chat with them. Y'all can ask questions, Twitter Spaces, all kind of stuff. So, and we'll have a lot of speakers on the panel. So like a lot of big name futures people are on the panel. Become cool. But essentially like an industry level podcast, but also with a lot of retail, and retail leaders like her and myself are leaders in the retail space, but also bring in some professional talent as well. People that have worked on the floor. Like we'll get a ton of people we can ask to come out. And I'm not going to spoil anything about some feelers though. There's enough interest that you guys are going to love it. Y'all are going to love who it is we get to chat with. Y'all are going to love that I get to chat with some people that that you guys are going to like to hear about. All right. So today, upper target 60.68 here. No trades yet. I hate when you just open very close. That's the only trade window we have. It's roughly 15 points. It's too rich for my blood. There's not a lot on this. I'd like to see the market at least attempt to support somewhere and find itself a good dip to buy. Greater market's all bullish. Everything's great. we go. 877 is my Nasdaq futures target, upper target there. $60.68 is nearby. Remember, only 4% of days close. Again, I don't trade outside of DD bands that often. I don't short. That's one of my rules. 4% of days close above the band. 96% of days close below the band. Not that I'm betting on a sell-off. Greater market is here and here to stay. One more little bump. 877. Zoom in on this one. Oops. We get it right on the dot. 877. That's the target. You should have a competition for a name. Yeah, that'd be nice. Dude, I threw my back out in the garage. If you don't hear me earlier. Ooh, it hurts. Prepping for the freeze. Bull, baby. Bull. Greater market, we are back. I love the fact that we are bullish again. Eggs coming up, don't forget it. Don't let the dog out. Hey, iDoc, can you bring me like a water, please? Mom and dad saved the market. That's hilarious. Daddy Matt and Mama Minx. It'll be cool. What we're doing right now is we're actually asking people for permanent speaker panels. So like Twitter Spaces has 3 host spots and 10 speaker spots. And we've been throwing feelers out about other people we think would great speakers and great futures traders to show up. So if you guys know anybody that you think could come on the panel, which in the morning be like a market show, but then like kind of transition into like talking with the CEO. So an example is if we got Jay Dunn on there and he's going to talk about futures family, or funded family. First 30 minutes, we're all trading, we're all talking trades, we're all talking the market. Then we kind of branch over into like letting them talk about what it is they're doing, what are they doing this week, what are they doing this month, what are the big changes. So who you guys think would be great for us to bring on as permanent speakers and as guest speakers? Guest speaker would be like someone with a service. We wouldn't get them on, one time. There it is, 877, baby. Well, I didn't mean to do that. Stop pushing buttons, Matt. We're gonna let it pull back. Let's watch it. Oh, dude, every time I shift, my fucking back hurts so much. Trying to close some of these down. Here we go. Ow. 90% off. A strategy for trailing winners? Not really. Like what I do is I trade from support to resistance every time. And then once I'm in my trade, I'm out. Dude, every time. Einstein on Wall Street? Yeah. Well, Peter's great. We both know Peter very well. That's a great idea. Really good idea. All right, so now up to there, that was the target, 877. There's the high volume pivot we talked about. So right now I'm trying to see if the market's going to pull back from here. Is that Dom sufficient for you to trade? Yeah. This is a calculation that we teach you how to do. It's called an illiquidity pivot, this red line. It's one of the best out of bounds calculations you can do for like volatile moves. And anytime we're outside of these green bands here on the chart, that's one of the better pivots you can find. Great for back pain. Okay. I'll be right back. I'm going to get my eggs. Give me like 2 minutes. I'll be right back. Eggs and toast, baby. Every single day. So trailing winners isn't great on days like today unless you're just trying to pass evals with unrealized P&L trailing. Yeah, what I like to do is I like to trade from support to resistance on day trading and just close out. So if I know where I'm going, I get my R&R, I get my full risk, my full reward, and then I just call it. I'm not too eager on trying to predict the close of the day. I trade from support to imbalance position. Like today, an example is, so one of the rules I have is I don't trade on moves that have moved this far at pre-market. So days like this, I let them, obviously clearly bullish day. I want to see a pullback so that I can long the market again. I don't chase the long from here, even though the market has a small probability of continuing to trickle up long, because I know that, you know, there's really not, it's not really cleanly moving. It's just like chopping around and then bumping up to my resistance, right? So as soon as I get to the target I'm looking for, that's basically it. So if you want to do anything, I have a system that I use for position that I'm in. So I have like a normal scale, a medium scale, a small scale, and a sit out scale. So normal is your normal position. Medium is half of your normal. Small is 1/10 of your normal. So if you want to hold runners, if you're, depending on where you start, if you start at medium, start at small, start at normal, holding a runner, just step down one. An example is of my normal, it's 10 contracts. So my medium is 5 and my small is 1 to 2. Then if I'm in a normal trade and I want to trail a winner, just hold like a runner to keep going, I'll cut it in half. If I'm in 5, I'll cut it down to 2, 1 to 2. So I'll step down to hold to the next pivot. So I don't trail a stop. I trade to a pivot and it's all or nothing. So either I get there or I don't get there. So pullback targets today, like I'm not betting on it. But if we get down in here, these are great targets to trade off of on the long side. The crappy thing is that the move I wanted took place pre-market. And so a lot of times, you know, when we get these prints after market opens, Pre-market, we were just way up, and it got that move there pre-market. So, fortunately, some days like this just don't give you good, clean trading. But the bull market is back, so we're definitely good. 60.68 is the final target on the S&P, that yellow line we were talking about. So because I know that, I'm very cautious longing up into a really strong resistance pivot. And I also don't short it from there either. I let the market decide what it's going to do from there. And for me, I'm usually okay with missing out again on a somewhat of a bullish up day to avoid making bad trades. I hate to blow up an account chasing the high. I'd love to see the market dip to a good pivot and take a long off of. Pasture raised eggs. I think so. I think we buy like the expensive ones. The ones that are like $50 a carton. I'm just kidding. Aren't eggs like $50 a carton now? I've been seeing all the memes about it. See my new room, but oh yeah, dude, check it out. The new office. Most of the stuff is like here. Can't see it. Yeah, this is the new office. Green walls, baby. That was my plan from the start. You try Robinhood, but lost all your buying power and unsettled funds, looking for a platform that doesn't keep your money and doesn't limit trades. What, Matthew? Hold on, wait. So number one, I'm not like qualified to give you financial advice, but to answer your question, that's regulatory. Like when it comes to buying power and having funds settled, that's regulatory. So what you want, if you're trying to day trade and not waiting for funds to settle, then you can do a cash account as opposed to a margin account. So when you sign up for your brokerage account, they're all the same. The brokers have the same regulation. That's what you're facing. You made trades, you close them out, your funds haven't settled, they won't let you keep trading, right, Matthew? That's what's going on. So typically what people do in your situation is open a cash account with the same broker. Cash accounts will settle that day. You close as long as you're trading your money, so you can day trade all day long. No margin rules, no PDT rules, none of that. And typically funds settle the next day. I think Robinhood has cash accounts, right? I don't know. I don't use them. Webull does. A lot of them do. But call your broker. Like I said, they're the ones qualified to give you that kind of advice. You do have a cash account with Robinhood. So I don't know what's going on with the settlement over there. Someone else might know. Sounds like stocks and options, probably options maybe. What week do you learn how I found that top resistance at NASDAQ? Okay. It is called yellow line, red line, or illiquidity pivots. It's one of the topics in there. I think it's in the latter half of the class, is like number 15 or so. So 877 right there. Really nice, right? That's the pivot. Let's see if I'm right. I'm not putting any risk on the table today, but this is the pivot. This is the pivot. The big pivot today. The big SR pivot, support or resistance today. Decisions will be made at 877. Let's see if I nailed it. This calculation is so good. The way to do this, everyone here knows red lines. It ties into the risk interval, it ties in the catalyst. They're all kind of in that same future structure, but let's see. I hate how every single time I try to draw a midpoint on here, it doesn't save my layout. It gives me this like rainbow jubilee of fucking colors. There we go. I mean, guys, come on. 877. I mean, it's to the penny. That's just another one of my little crystal balls. Let it go. Yeah, Matthew, without knowing anything about you, I don't know what's going on, but I also can't advise you on your trading either. As maybe somebody here can help you, but I can't. The best thing you do is call your broker. Ask him the exact same thing you're asking here. They'll have an answer for you. But a lot of these retail brokers, they're not making rules that other brokers aren't also making. It comes to like margining and stuff. That stuff's all governed by FINRA. And like, there's rules that every broker has to follow and they make you follow. So without knowing more information, you have to just possibly take the possibility that what you're experiencing is something you're doing, that it'll happen no matter where you are. But always, as you know, you should do is talk to your broker about it. Like each of these different brokerages aren't like setting rules on margining. Some of them will like loan you more money, like give you certain margin requirements slightly differently. But when it comes to buying power and letting funds settle and stuff, they're all following the same regulation. That's what I was trying to say. We got a pullback and I'm waiting for. So in NASDAQ, the pullbacks today are, so we're going to test the greater bull market, right? So the market rallied like really fucking hard last 2 days, and we flipped all three of our indicators are bullish now for greater market. So I like to see a transitional market that was bearish, that flipped bullish, to test something in the greater market. So of all the things to support and test, monthly hedge pressure is one of the three. Not that I'm betting that happening, but if the market were to quickly sell off tomorrow and find MHP and support off of, to make sure that, okay, we are back to being bullish. That's what I'd like to see. So while I'm not hitting this like trickle up long from here, I really would like to see some kind of test of the greater market structure, because that's what supports for bigger ups, right? Breaking all-time highs and everything else. So ideally today, I'd like to see a nice strong bull pivot. Now with the evidence we have, res greater than 0. This is a strong pivot. This is a strong pivot. BLU, that's a strong pivot. And they're all strong pivots today. Each one of these places has a chance to bounce. So anywhere in here is all long pivots, each one of these. So I'd like to see something. Good strong bull day like this. I'm not expecting the market to sell off really hard at all. The market's more likely to close long and strong than anything else. So I'd like to see that MHP test maybe tomorrow. Kind of nice. But yeah, my brain is long-minded. I need a good dip to buy. So in days like this, I kind of like cross my fingers and hope that the market maybe flushes for some weird reason and I'm on the sidelines ready to get that dip. Instead of kind of like trying to inch myself forward with like 10 or 20 points at a time. Days like this, if you just wait, it's better for me to miss out on like $1,000 or $2,000, right? To be on the sidelines to wait for a $10,000 trade. That's what I like to do. Yep. That's the way I look at it. Res's relative weakness, resilience is as strong as it's ever been the last month. It's pretty solid today. Gap and go is strong. But if you guys like, if I nailed it on my NASDAQ pivot, oops. You like that? I think today's class is over that topic. heck's going on with Nasdaq here? Here we go. If I hit 21,877 on the dot, you got to come to the class on how to do that calculation. What is going on? My Nasdaq candles today. What the freak is going on here? Loading weird today. I can't even. Where's the rest of my data? I don't even know. S&P 6068 is that upper area as well. So my goals this year for 2025 are to transparently show you guys 100K payouts from ETF, 100K payouts from Apex. I'm going to try to get on top 20 leaderboard and top steps. I'm going to do ABC. So ETF, I'm along the way. I already took out a 15K payout. I'm still trying to keep some fat in the account before I take out my next one, but hopefully I can have that goal completed by maybe February. Yeah, I'd love to get on the top step leaderboard. That'd be kind of nice. But if I got 21,877 right, you have to come to the classes. Check out those links that are being posted by the bot. And this calculation, I think we're going to talk about this one today, actually. So we'll see. Oh, no, Joe. Yeah, you're right. Well, I actually post my bank deposit, like a picture of my bank. So I go all the way. When I did it, I posted like a picture from Rise and I posted a picture of the deposit, and then even Elite Trader Funding retweeted it. So I think that's as good as you can go when it comes to verification. Yeah, but that's totally right. You nailed it. Apex doesn't use Rise. Yeah. But I always post my bank because you can't argue with that. That's what I tell people. Here's the deposit from the bank. Full port of the voice. What is 21,877? It's called an illiquidity pivot. This number was calculated. Let me show you how it was calculated. You guys ready to have your minds blown again? All right. Let me show you something cool. Now again, I'm not betting against it or for it. This is predictable high volume. And it's related to this particular day. Anytime you have like big ups or downs in the market, we have a way to calculate some return pivots. And I keep history of all of them. So here's the bull market that we've had. And I've got all the red lines and yellow lines since freaking COVID, okay? All the way back in the day. I keep history of them. And anytime you're trading outside of DD bands and you need a pivot, they're really good pivots to utilize. This was calculated off of this particular day. That sell-off day that we had. There's a technique that we teach on how to do it. That was that catalyst, by the way. Delete that. Right here. So I have two different pivots off of this particular event. There's something magic going on there at that exact spot that today we're revisiting to test. Now, this 806 was the first of the two. That particular event, it comes in pairs. We call them impact and run length. So we first cleared the run length at the start of the day, and now we're playing the impact. These are from weeks ago. So here's the first pivot, right? Once you get right up to it, there's all that volume from this pivot. And then this one, there's all that volume from this pivot, like volume spike, volume spike. So there's some kind of like rebalancing thing going on here. Actually, let me leave that there for a minute. But there's one tiny little bump up that we can expect from here. The S&P also has another illiquidity pivot that it's playing with. 68. And 6068 was calculated a long time ago. This technique is so cool. Like, honestly, I'm going to show you some neat things about it. It's utilized to forecast pivots at all-time highs. So an example is like way back here. Let me show you some. When the S&P was 5,000, 5,100 for the first time ever, each of these updates produce one of these pivots that looks into the future. So this particular Thursday had a certain move, and we go, aha, there's a moment where we're going to return to that area and pivot. So from S&P 5041, we're looking at 5317, 300 points later. There's a thing going on there. And same thing here and same thing there. And as you hit these pivots, they become pivot points. So here's an example. This was all-time highs at the time, and I calculated this level. And then right here, a month later, it's a pivot. There's something interesting that we're exploiting with that. And this, how do you find a high volume pivot out of bounds at a high volume node without a resistance to trade off of? I mean, you can see here, it's exactly to the penny, and it's a calculation. It's a risk calculation that the CME group does. You see right here, this particular day doesn't seem big, but you see right here where my mouse is, it hits that pivot and sells off exactly on the dot. So we just trickle up, trickle up, trickle up, and all of a sudden there's just a weird candle that dumps off of it. Doesn't mean that it has to happen, but there is high volume every time. This particular day had one there, and look, there's resistance there and resistance there, 2 separate days. 58.33, 59.70. So you're forecasting pivots ahead of time at all-time highs. And they are rock solid. There's some of the bigger pivots that you have. The two that we're playing between now is 59.70 and 60.68. And you can see right here, I mean, there's all kind of on, look at boom, boom, pivot there. Boom, 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 pivot there. Pivot off of it, sell. It's basically playing ping pong between these two. So the question is, what is 60.68 going to do today? And it's, like I said, predictable high volume at highs of the market. The question is, the S&P burps to there. This is the big breakout pivot. This is the decision it makes. Fairly often, it does sell off from there. Fairly often, it does. We don't have the stats on it, but it's often enough that I don't long into it and bet on it continuing to break. What I normally do is let it break, bounce on the support, and then take a long, and then I have a stop loss, and I commit to the trade. But normally, I end my longs up against one of these yellow lines, just because that's where the market tends to find its biggest resistance out of balance. And like I said, Nasdaq is still fighting that same little pivot there. Will it happen? Well, markets are random, so statistically, it can, which is why I don't chase along into it. If that makes any sense. Ooh. That red one is important for Nasdaq. The more important of the two is this yellow one on S&P. This is the guy. Yeah, we're waiting to see what happens there. You'll see. There's a reason. There's a reason I don't chase up against these pivots. The times that it does reject, it rejects hard. But I'm not, like I said, the market's strong. We're strong and bullish today, so there is no bear market today. But again, like I said, I still am cautious jumping into a long right at the top. The big SR right there. We'll see if I'm right. I'm usually right. Don't forget to use our codes if you guys are using ETF or Apex. Big sales going on. We have codes and all that for you guys to use now. So one of the things you guys will see me not really do much is when we're outside of these green bands, you know, pre-market, the market has moved up a certain amount. I don't usually take big trades outside of here. Small longs, if anything, but yeah. Can you trade through TradingView with ETF? I believe you can. Yes. So usually, here, let's see if we get like a nice little rip up here. Let's see if it does something like that. I think I want to see. I'll be a little kind of like more convinced of something happening if we do test this yellow level here. I got my eggies. Thank you. You got 5 ETF accounts? Oh, good luck. So you guys can see, right? That's that calculation. I mean, it's fighting here. So that is the next SR pivot. And then at the start of the day, you get that number here. So that's what's good about this kind of style. You know, there's no technicals. I don't even know why I'm just trying to draw an impact line here on the way up in case we do break out. Don't need that right now. Let's see what's up. Y'all tell iDoc good luck today. She's got this this meeting thing she has to do. Presentation thing. Well, I mean, I was trying not to dox it so that, you know, I'm not announcing that you're interviewing, but that's what it is. Bear market's over. Yep. At least for now, the bear market's done. Pullback's over. Yeah. DD band is a futures concept, Kulu. Yes. It has to do with the margin requirements in futures. You can extract pivots from that information. Case in point, you guys, the best part is you guys are here watching every single day, right? You can't make it up. These pivots, this pivot was drawn here at 5 p.m. yesterday. And look at this on the dot, right? This is based on margin requirements. And this is based on market maker risk. There's a whole other thing that goes here. So these two lines playing ping pong between them, like to the dot, is one of our tricks. And they're both futures. So the question is, the S&P has one more bump to hit that 68, the one I was talking about a second ago. And the question is, what happens at S&P 68? This is the big SR today. This is the big guy. Super high volume on this one. Where do I find that pivot indicator? Oh, I invented the calculation. We teach you how to do it. You can take our classes and learn yourself. It's $1 a class. Let me give you the link. Don't take my word for it. Go read the reviews of what people say. Just go read the review. I invite you all to click that link I just posted and go read the reviews from what our members say about the classes. My desire was to train you guys like you would, like an author writes a book and make it $20, like you buying a book. Hit it up. not to make it like a $500 a month. Like, let me train you for $500 a month. Just buy the book, learn the technique. Take it with you anywhere you go. Surprise and impress all your friends that you drew a line on your chart. It's an exploit of a particular protocol that the CME group created to control the futures market. And as you see on your very screen, this line has been there for weeks. This red one has. Well, I drew it, but it's there for weeks. We share them in our Discord. And that's the big SR pivot today on NASDAQ. Tips on becoming a more patient trader. Hang out here with me, dude. They don't call me Yoga Matt for a reason. Or they call me Yoga Matt for a reason. Well, partly because I do yoga, but because I'm like, I got the patience of a freaking hippie sometimes. I know what I need to do, and the tricks are pretty easy when it comes down to it. Number one, when you see markets moving up, you feel like you're going to miss out on something, right? One of the things is I don't let the market moving entice me to be like, I'm going to miss out. Let me get this. The feeling has gone away. Years into this, the feeling has gone away. I know exactly what I need to do and when I need to do it. And that's it. I wait for it. And if I don't like what I see, even by my own self pressure, and even from you guys come in here and y'all are like, does this guy overtrade? Like, people come in here and say all this stuff. But what happens is you're observing a master at their craft, and the newbies come in here and say stuff like that. These are the people that don't make anything trading, and observing patience is a big deal. Like I said, let's see. Let me talk about this real quick. How to be patient as a trader. Let me tell you a story. Hold on. So, so the story goes, how do you be patient as a trader, right? It's, you have to plan and know what you want to do before you even do it. Now, as the story goes, is that when Michelangelo, the sculptor, was sculpting the statue of David, right, the big famous statue, Michelangelo came from a family, a wealthy aristocratic family that, you're not supposed to work with your hands. The servants would do that. You're a noble kind of, you're that level of status. You don't work with your hands. So, he would get mocked or get in trouble. If anybody in his family saw him carving a statue. So for months, the servants would go by and they would see him and he would just be staring at a block of marble or whatever his grace, carving it out of him, just staring at it. And they, months go by, he's still staring at it. They're like, what are you doing? And like, why are you doing this? This is, he's like, well, I'm working. And the takeaway from that was that he was carving it in his head. And before he even made a single into the medium, he already knew exactly what he was going to do. Every single thing he worked out here, stared at every angle, figured everything out, and did it quickly. So that, obviously, he couldn't be spending months, trial and error. So again, that's the tale that is told about that. And the idea is that you have mastery of your craft. You need to plan exactly what you need to do and do it. And when people watch me trade, and they're like, "Is this guy ever make a trade?" I make tons of trades, and I maintain a fairly high win rate because I'm patient. And there's two styles of trading: high volume, low win rate trading. Your trading account's all over the place. Mine is stable because I wait a lot. I lose, but it's with control. I win, it's with control. And my P&L is I think, better than the next YouTubers, but you guys can decide on that. I don't take every trade you see move. Every time the market moves, I don't feel like I need to do something. I know exactly what I need to do. Market's bullish, and I can either get in on a trade on the S&P since the market opened and inch up 15 points over 2 hours, inch up as it's just chopped higher, or I can wait for a market scare to flush. And while everybody else is trying to sell off, I got my back pocket bull indicator to take a long off of. So patience is more like representing you as a chess player being 3 or 4 steps ahead. Right now, I'm 4 steps ahead of a bull market. Right now, at the start of the day, I'm out of bounds. Okay, I'm going to sit out on longing, and I don't short outside of these bands either. I'm going to wait. Market is moving higher, moving higher, moving higher. 4 steps ahead. Okay, here it's likely to bounce 1 step. Here it's likely to test and reject 2 step. Number 3, I don't know if it's going to sell off or not. Bullish markets usually don't, but if it does, step 4, where are my bull pivots to trade off of? And step 3, and then step 4, when we get there, as long as this stuff is still bullish, I'm the first bull in on a red candle. There's better R&R on that trade, so I'm waiting many steps ahead of a move. So like I drew this morning, when you guys first got here, was I actually drew something like this, that the market was going to test this and then decide what it wants to do. And inside of here, I'll miss out on 10 or 15 points, whatever, not a big deal. There's no news today. It's going to blast us up higher. So the momentum's not really there. And VIX is on like a key pivot point where the volatility is still possible. So now that I'm saying many steps ahead, wouldn't it be great? Right? See, I'm the different kind of trader. And there's people call me like wizard and stuff because I tend to do this kind of stuff. But it's just planning many steps ahead. A lot of people don't have accurate pivots, so they can't do that. When you have accurate pivots, you can do that. Here's a pivot, there's a pivot. I'd like to see it test this pivot. I have no reason to believe a bull market's going to just randomly sell off in the middle of nothing. This is where the high volume is going to be. If there's sellers, they're here. And if it tests and if it sells, then I got some back pocket bull indicators to long off of. NASDAQ, I have 522.5. I'd love to see this try to flush one more time, and then I get my big long for the rest of the week. And that's how I feel, right? So I look at everything risk and reward. Nothing makes me feel like I'm missing out. Nothing makes me like, you know, I don't need the money. I'm not trading like, oh crap, I need to make money today. I need the reward for the risk I'm going to take, and that's it. I don't need to try to bet on the direction every single moment in time. You guys watch people on YouTube. They're always in a trade, and they're always never showing you their historic performance either for that reason, because it looks bad. That's every YouTuber. So monthly maps on anything that has ETF. I'm sorry, anything that has options. So ETFs, stocks, everything. Yeah, like you said, Nvidia. Yeah, like Nvidia, right? On the maps on Nvidia. So Nvidia, nice and bullish, nice and bullish. Nvidia looks clean. What do I need to take a short if ever? I short off of 3 things only. Only 3 things. I'll show you. Give me a second. Because when markets are rallying or markets are selling, there's always long pivots. So in both markets, bull markets and bear markets, I preferably choose the long pivot because there's always long pivots, even when markets are selling. And the market crashing since Fed, 2 of my $10,000 plus days were longing those dips. As the market was selling off and then it rally a little bit and then sell off and rally a little bit, I got the long legs up. So longs are just more favorable because probabilistically they're at higher probability. The 3 places I do short are off of MHP from the bottom. This is shorting on monthly gamma. The S&P, I'll hit that from the bottom if this tiebreaker indicator is below 0. So that's one of the conditions. Number 2 is I'll short if the stocks themselves are bearish. So if this ratio right here is less than half the one I'm circling top left, then I've got 2 really good strong pivots to short off of. I short off of bear zone tops, and I short off of DD bands at the top. Very high probability short pivots. And I only take high probability short pivots because the market over time almost always wants to be bullish. So it takes a lot of convincing for me to want to fade a market. It's not how I trade. So some of our things I'll tell you on the screen right here. This is guaranteed high probability, high volume at 68. High volume, very high volume. Here, 4% of days will sustain above here. Very small probability that markets rally and sustain that much. And 96% of days actually close underneath this upper band. So this is the upper band. And normally I would short off of it when you're below it if that ratio's less than half. And clearly it's greater than half. So the bull market takes over. So what I'm looking for is I'm looking for either the stocks to be bearish or the SPY itself to have short gamma. So like, that's basically it. Markets always go up, so it's really rare for me to want to try to bet that they don't. If you sell a call, that is called not bullish. So let me define properly how you guys should say it. You're in the right ballpark, Cameron, but it's semantics. Think of it like this. You have different states. So you have something called bull, you have something called bear. And a lot of traders do say it a certain way. I like to give you something that makes it easier for yourself. So let me talk about the proper nomenclature. Hold on one second. So a lot of traders kind of get these two things wrong about what is a bull and what is a bear, and maybe should like have some definitions of these things. So in a definition of what we call it here, Rocket Scooter, a bull is somebody that is actively longing the market, the underlying asset. So you're longing SPY. A bear is somebody actively shorting that thing. If you are to buy that thing, you are a bull. And if you were turning cash into that thing, you've become bullish. Cash into a long. If you sell your long, converting your long back into cash, you're not a bear because you got out of a bull trade. You're just a not bull. There's a bull and a not bull. So this is like, computer logic, right? So a bear is somebody that turns their cash into a short. And then a not bear is someone that turns their short back into cash. So when you are buying options as a bull and as a bear, if you were to long a call, so you buy a call. So I'm longing a call. As longing something means bull, I am bullish on calls. So it's two different words there. Not just the call implies bullish, but I'm bullish on the call itself. And the call means if it goes in the money, I'm bullish the stock. Okay. So if I'm long a call, I am bullish the call. If I short or sell a call, or short a call, it's not necessarily a bearish trade, even though a market sell-off will certainly give you the premium on that call. It's also a not bull trade. And the reason that that's important is because when you're trading, let me give you an example. Your call strikes right here where I drew on my chart. Call strikes in the money right here. Strike. Okay. Here. If the market is, if I sold a call, so I'm a negative call here, then it's not necessarily a bearish trade, even though a bearish trade pays out, but also a flat trade pays out. So when people are like shorting calls a bearish setup, it's actually just a not bull setup because the market can do anything except be bullish. That's why you say not bull. The market can go sideways, downways, volatile ways, shit. It can go back in time and go back to the beginning of, I'm just kidding. Markets will go back in time, but anything but bullish. So it's better to say it's an anti-bull or not bull trade. So if you think bearish, your brain says, it has to sell off because we all traditionally think bear means selling and bull means buying, or bear means crashing and bull means rallying. But bull just means buying that thing and bear means shorting that thing. So when you're selling a call, it's actually a not bull trade because a sideways market is neither rallying nor selling off. So just not being bullish pays out. So if the market is sideways or choppy or not striking, it's more like a not strike trade. So I see it like that. So if you sell a call, I wouldn't say that is being bearish. It's just you're betting on the market not being bullish. Does that make sense? The semantics are important because options have that added bonus of paying you out when they go flat and you've sold an option out of the money. It requires neither bull nor bear for you to win. It just requires time for it to go nowhere. And that's kind of a neat way to think about bulling and bearing the market. So when we say where the bulls are, where the bears are, especially in liquidity maps, a bull is an actively engaged long in the market. The bull zone, there are people actively longing the market more than there are people shorting the market. The bear zone is people actively shorting the market or short structure, right? Yeah. So I usually think of it like that. So while traditionally, yes, the bear play, if you're shorting a call, That is a trade a bear can do. But there's an added bonus that if the market also doesn't turn bullish, you also win that trade. So it doesn't require, so it's a bear plus trade. So it's not just a bearish trade, but it also rewards you for the market going sideways as well. So if you were selling a call or selling a put the same way, you actually benefit if the market goes nowhere and your call goes or put are out of the money. So it's like as shorting the SPY itself is a bear trade, selling a SPY call is a bear trade, comma, not bull trade bonus with the asterisk. You get extra money if it doesn't go bullish, but also doesn't sell off too. So calls have that added bonus of that added effect. They can profit multiple ways off of multiple Greeks, that being one of them. Call, if you sell a call also, you can profit on the idea that you're betting that during a high volatility or news event that you don't break the expected range. And therefore, it also has another comma, and it's a not volatile trade as well. And then you collect premium selling a call, doesn't break the expected range on the IV crush. So options, when you sell an option, there's a not this, not that, not whatever that goes with all of those options. So when you sell a call, there's different strategies besides just bull and bear. You're betting on volatility happening, then you're going to buy a call based on that. Betting on volatility not happening, you're going to sell. So when you sell an option, you're betting on something not happening rather than betting the opposite of the direction. So direction is just one piece of the options pie, delta, right? And gamma, these are delta, these are price or direction related indicators. But volatility, the time it takes to get there, you know, there's a lot of other things that you can bet on with an option that is wrapped up in the premium. So a lot of people just think, oh, if I short a call in the market, if I sell a call and the market falls, I make the premium. And it's thought of as a bear trade, but you can, a lot of people sell option strategies to sell certain things or buy certain things to just gamble that the market stays flat. And if the, or to, you know, either straddles and strangles, some of them bet that the market is going to be volatile and volatility pays out. And so an option has many different ways you can beat. You don't have to necessarily be a bull or bear. You can create different kinds of traders. I'm betting that there's no volatility. I'm betting that there's extra volatility. I'm betting that we don't break an expected range. I'm betting that we don't get there by Tuesday. And so the flat strategy or the volatility crush or crunch strategy or expansion strategy are also big parts of the options world. And they also factor in the premium pretty heavily. So anytime you sell an option, when you're trying to collect premium, you must take into account all those other things too. Well, remember, volatility is not necessarily like bearish or bullish. Volatility is just the amount of choppiness you get if something's trading flat. Where the buyers and sellers are at different places. And that very heavily weighs into the changing of the premium, the options. So yeah, no, I love explaining options a little, like to think. So like, yes, if you're selling a call, technically, you know, and you're a bear, it's not necessarily a bad bear strategy. But if you are a bear betting on the market to sell off, buying a put is going to pay out more for the most part, tit for tat, than selling a call. Selling a call, you collect the full premium. Buying a put, the market crashes to zero, your trade can go up, you know, many tens of thousands of percent. You never know. So if I'm a direct bear, I'm going to buy a put. If I'm a direct bull, I'm going to buy a call. If I'm a cautious bull, I'm going to sell a vertical call spread where I have a call in my pocket in case it breaks out, but I'm selling calls thinking that it's not going to rally past a certain point at a certain time. The market's inching along higher. Let me sell vertical spreads against my short position in the market if I'm a bear or something like that. So you could collect premium if it just inches higher, and if it blasts higher, then you've got hedging against your short. Like, people use these strategies in so many different cool, complex ways to do it. It's very nice. Selling options if trading where the market is not going. Buying options where you think the market will go. Not going, or not going by X amount of time, or not going in a certain style of volatility, or not breaking this range in X amount of time. So there's a lot of nots, as Neil is saying, not just not going, but how it gets there and when it gets there. It can also be knots on your trade. I sell an at the money call for Friday right now, I'm saying that by Friday, my strategy could be Friday that we don't pass there. I'm betting, my bet might be time. Your bet might be direction. Yeah, for a lot of people, it's too much. Because the complexity is infinitely there. Future is so much easier. Long or short. That's it. Your two options, go up, go down. Which one you want? Pick one. Your header's trying to understand options. I'm saying day trading options is not something I ever tell people they should get into. Nothing if you do. It's unless you want the complexity, options gives you the freedom to structure complex trades. If you're using it for that, then they're amazing. You pay higher taxes on them for that bonus. If you're speculating the market, buying calls and buying puts, trade futures. Taxes are better for the same thing. I tell people. Yeah, you want to play the Greeks and have complex options trades. Like I'm the bet like today, I can sell an iron condor. I can bet the S&P stays within a certain range and I can make a little premium if that happens. Sure, I'll trade options. But if I'm going to speculatively trade the market, longing up, shorting down, I don't play options for that. Options have a lot of problems when it comes to day trading. Number one, if you are wrong and the time expires, your investment goes to zero every time. To zero. No forgiveness. If you guess wrong, not only on direction, how it gets there, and when it gets there, your investment goes to zero. You lose it all. That's a lottery ticket. It's harder. The Greeks make the trade even more complex. If I were to long a futures contract and it goes straight to my target, or I had to long a futures contract and it does this, and at the end of the day goes straight to my target, my profit's the same. But if I bought a call and it did this, the values are absolutely different because this one decayed more, being out of the money further and longer than this one. The direction and place you end up is not the same. So options is not just where it goes, it's how fast it gets there and what it does on the way. So yeah, and then on top of that, you're going to pay short-term capital gains tax, which tax on top of your income. You six-figure salary folks, your trading gains is going to start you tax at 40%. If you're making 200 whatever thousand a year. In futures, none of that happens. You're just betting on direction. There's no Greeks. There's no PDT stuff, and taxes are better. Complexities aren't there. You're just betting on direction. You're gambling on up or down. That's it. You gotta get AJ to come on the podcast to talk about Greeks. Well, I'm not gonna spoil the surprise, but AJ's 100% down. Anything I ever listen, AJ's always been down. Every time I ever asked him to do anything, he's like the most down guy ever to do whatever. So I'm sure AJ will come on and be a certain permanent guest for the most part on the show. Me, and it's funny, like me, AJ, and Minx kind of came up through the ranks on Twitter at the same time. She came a little bit after us, but we all kind of were always like together when we all got started on Twitter. I wasn't big on Twitter 3 years ago. I was big on like YouTube and other places. On Twitter, like 3 years ago, I think I had like 1,000 followers on Twitter. Now I got like 24,000 or something like that. We all relatively started at the same place. So we were always working and doing the podcast rounds together. So the three of us have always been really helpful with each other. Anytime anybody, either of the two of them ever want anything, like, hey Matt, like AJ will call me sometime. Hey dude, I need a speaker. Can you be here in an hour? Somebody didn't show up. I'm like, yeah, I'll be there. So he's super smart. He's always down. And I like to take credit for discovering AJ. I'm not a talent scout here, but I heard him talk one time and I told everyone I knew, this guy is smart. Bring him on. So I got him on a bunch of shows with me, and then he just blew up. Everyone was like, I hear somebody talking about the Greeks. I thought that's what I like to hear. He's always been like, he's like, Matt, you were the one guy that believed in me. And he's like, I owe so much to you, blah, blah, blah. So he's a smart guy, super smart dude. Like, he knows his stuff. So good guy. But it's very rare that I hear someone talk and I'm impressed with like their technical level And it's one of the few people that I thought was like, more people need to hear this person. So I gave, and Ashton was a big help to him too. Ashton and I both met on a podcast on The Street. So The Street, you guys know that company. We were on their weekly podcast with a couple other, with Peter Tuchman and Jay and Sarge. And we were like, we need to get AJ on that show. So he got on there and he just crushed it. I think I've been on Twitter since 2016, but I never really was actively using Twitter until like the 2021, 2022. All right, so here we got going on. Here's our pivot, 21,877. Waiting for S&P to tap the yellow line. Let's see what's happening here. 68. Oh. We were big on StockTwits when StockTwits was big, like in 2015, 2016. And Twitter would just like mirror your StockTwits post. So basically, my only engagement on Twitter was not directly. It was like I would post on StockTwits, and then it would auto post on Twitter back in like, 8 years ago. And then probably about like 2021, I would say, a year before Riot Studio came out, I started getting very active on Twitter. Like basically what happened was I jumped on Twitter one time just to load it up when Twitter had Spaces. So Spaces was a thing, and not everybody had access to it. So right after 2020, Twitter was like beta testing Spaces, and some people like Wolf Financial and some other people had early access to it. And I just turned on Twitter Spaces, or Twitter one day, and I had a little thing pop up that said, so-and-so that is in a space. So I knew Vegas, if y'all know her, she was in a space, and I hadn't been on Twitter actively like pretty much ever. And then afterwards I messaged her. I was like, hey, this is pretty cool. What is that? She's like, oh my God, Matt, where have you been? Haven't heard from you in years. And then like I was like, oh, I'm just cruising through Twitter. What is this Twitter Spaces thing? It's like, oh, it's it's like a meetup thing that they have on Twitter now, and everyone's doing it. And this guy Wolf Financial, he's growing really fast on it, and he's doing like financial podcasts. She's like, I got to get you on. This is amazing. And then so basically because of the Spaces, like I interviewed with Wolf to be on a panel, and then he invited me on one space one time, and they invited me again like maybe a month later, and then like a couple days or a couple weeks went by, then he invited me on like a bunch of them. So then I was like getting active on Twitter just because of the Spaces thing. But that's all that happened. I was never like active on social medias. I was always a like anti-social media kind of person. Until people are like, no, it's like important. You have to learn. Don't be such a boomer, Matt. You got to learn this shit. Liquidity map and resilience. Let me show you something really quick. Okay, so what liquidity map and resilience are. Liquidity map is a calculation based in the equities world. So if I'm trading S&P and Nasdaq futures, I can do liquidity map on SPY and QQQ to get some extra bonus information about what my futures are doing. If you see off to the right, the liquidity map has a little flashcard. This is the flow path of the options framework. So underneath, so SPY for an example, people buy and sell SPY options all the time. We were able to extract zero risk options trades from that, which basically means we can find where market makers' balance points are. And based on those options, if there were no speculative like random human trading, if you just stand back and let just the automated part of the market hedge options to zero risk, then you can calculate the flow path and the direction. I mean, I'm an engineer. These are engineering calculations at this point. If you can calculate, like if I could calculate a bottle that has a certain pressure and there's a little nozzle on it and there's a hole, I could calculate the velocity and direction and where that water lands and stuff. So with a little bit of information, options are like pressure, right? That's why I call this stuff hedge pressure. An option that's in the money requires somebody to buy a certain amount of those shares. So there's automated longing. So what this is showing you is if all things are equal, what is the automated trading doing on this particular price? So price is navigating through this landscape, and you can see right here that above this orange line, you see all the arrows point up. So above this orange line, all the arrows are pointing up. And below this orange line is where the big sell-off happens. You see the difference? Like there's selling pressure here, but all things being equal, there's longing pressure. It doesn't mean the market has to go that direction. It just means that underneath everything, there's a wind that's blowing. This is supposed to be air. There's wind that's blowing up from this orange line. As long as you're above this orange line, there's going to be people buying to balance out their risk. That's what that means. So liquidity map is that. It's the map of where you can find proven liquidity or proven buyers and sellers based on options. It's guaranteed. So blue and orange, these are high volume pivots, guaranteed. Every time you touch them, there's going to be high volume because of the wind. It's gamma, delta, theta, all that kind of hedging that makes that happen. Resilience is a gap fill predictor and aggregate of the stocks in the index. So again, if I'm trading S&P or NASDAQ futures, SPY gapped up. SPY opens here and it closed here yesterday. SPY has gapped up by trading overnight. We gapped up. Now, is SPY going to fill its gap or is SPY going to gap and go? If this white line is greater than 0, then it's more likely to gap and go than to fade. So at the open, that's a long setup as well. That's it. I don't use price indicators. I don't use any of those. I don't think you can predict the market with price-based indicators. So an example like here in the classes, you learn each one of those techniques. And here, like I drew 60.68 a little over a month ago. It's a high volume pivot. Now the question is, what do I do when I get there? So we'll teach you like, how do you calculate this and how do you find volume in the market? That's kind of the whole point of our classes. It's, technicals tell you that price, you can predict the stock market based on price action. And we tell you you can. And I'm an engineer. I'm an accomplished mathematician. I look at the market and I tell you, you can do that. So technicals and gurus selling technicals are trying to tell you that there's predictability. And it's really just a sophisticated coin flip. But what is predictable is finding volume. And that's kind of what we excel at. And we do it in so many different ways. All of our techniques are different. And like I said, when I touch 60.68, that's the activity today. NASDAQ was 877, as we mentioned, was the NASDAQ strong pivot today. And this was drawn a week ago. So the idea is just I'm looking for volume. And I'm only trading where volume is going to be. Instead of trying to predict direction, I'm taking a guess. Are we selling from here or do I long from there? Is the volume going to go bullish or the volume going to go bearish? And volume, you just know where volume can be because you can calculate it. But direction, you have to take a bet on because you can't guarantee any direction in the market. So as I said, I've been waiting patiently all day for 60.68. You scroll up to the first thing I typed right when the market started in chat. You'll see 60.68 was the first thing I said today. But again, as it looks good, I still don't make trades this high up. Markets move too far too quick to make a trade. If you buy the lifetime and I sell the website platform, why would I ever sell the website platform? Oh, you kidding me? I make my money trading. I would never, ever sell my website or platform to anybody. Kidding? I wouldn't have a job. Well, would I be? If I couldn't have hedge pressure, I couldn't trade. But even if whatever case, somebody walks up to me and says, "Hey, we're a hedge fund. I'll give you $100 million for your platform." Well, if that's the case, I would obviously negotiate for them to have it still open for us to use. And if they said hell no, then I certainly would negotiate a many times return payout on your investment for a lifetime. How about that? But of course, I would never sell the platform. If someone offered me $1 billion, I'd sell it for sure. But I certainly would give you guys your money back plus some. Plus a whole lot if I could. I would negotiate for that if that's what happened, but I don't bet on that happening. $1 billion, come on. Hey, you never know. Sorry, probably a silly question, assuming that you're buying options at those pivot points, but you're instead buying actual futures itself. Yes, sir, Dominique, that's correct. So buying and selling futures. People going bonkers? Let's check it. I'd use the RSI. No, don't say that. You're gonna make me throw up. Yeah, and here we go today. Bull long up, hedge pressure long. This is a really cool. When both your monthly and weeklies line up together, it's a great pivot point. It's really strong when they're both at the same spot. You had that today. Market dipped, hedge pressure. This is what, like in S&P, I'm waiting for the same setup. See how markets fall? And when they fall, there's always that long wind that comes off of those hedge pressures, right? So if there's any kind of pullback today, I'd love to get a long trade off that little tiny pullback there. Yeah. So for example, today SPY is about to walk into a really strong pivot, and I'm waiting to see if in middle of the day or end of the day. So it might be an end of the day trade for me. Is there are two very strong pivots from there and from here to here. If by any chance they're selling, which there likely won't be, but if there is, there's two really strong pivots from here. I would love nothing more than to see the market try to flush out some volatility, and I can build my long at a better spot. So that's kind of what I'm waiting for. There's that 2877 pivot. Let's keep watching that all day on NASDAQ. It's trying to support there, so. Is this not Trade-Evade? This is Trade-Evade on the right. This is a Rocket Scooter on the left. I use Rocket Scooter for all my charting and all my indicators, and I use Trade-Evade to execute. 6068 on ES. Let's watch it. There it is. Like I said, if it tapped, you guys have to take the class. Okay. Okay. January is 1637. That's correct. Yeah. $16.37 right here. There it is. There it is, folks. That number is like 2 months old. There it is. Okay, so if I were long, I exit my longs at yellow line every time. I don't long outside DD bands since I get a strong pivot. Then get it. Just watch it inch slightly higher. I do that. I'm patient. I know my good trades I want to get. And there she goes. Round the money. 60.68. And look at that. That's the high right there. If you break it, you're going to see big volume on the break. Oh, man, my back hurts like crazy. So this is a cool, we have a class on this one that's very cool. You guys will like that class. And when do we teach that class? It's coming up. Let me tell you when that is. Oh, again, I'm not betting if the market reverses, but I don't long into it. We're right on the edge. Class number 15. Yeah, we're doing it today. How about that? It is today's class. All right. You guys lucked out. Oh, I need to upload the 60 days. Yeah, but that's the one that we're on. I think we're on that one today. How you get into the Zoom? Here, let me give you the link. You either get the, that is just for the Zoom and the classes, or if you want the platform, it's half off right now to try. The platform is the second link I'm posting. This is platform plus Zoom. That's the one most everyone's in. The Zoom is posted in the Discord every day under Zoom call channel. So, ladies and gentlemen, there's your 60-68 pivot. There's your high volume spike right when you get up close to it. I'm going to reject off of it, as you see. Blah, 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 blah. This is it. Now, again, I'm not betting on a reversal here, but this is usually the end of a long setup whenever you get to it. I don't usually bet beyond it. I let the market hit it, and I step away. And usually from here, on many occasions, I'd say more often than not, it holds and doesn't sell off. But they're a higher probability than you would think. We just don't have the data on this because they're all different. But there's a higher probability than you think that the market can sell from there and sell hard from there. I don't bet that it does, though. But I do get out of the way on the long side right at that pivot. And if you're impressed that I drew 60-68 over a month ago, and I've been talking about that level all morning, and here is the one place it is trying to sell from with volume. That is going to be taught in the class, and today we'll talk about this one, how to calculate it. The number is automated by the algorithm. It gives it to you here in this table. This is the distance, and we'll show you where you measure that distance from every day. So because I know that's nearby, I'm not chasing along at the market open, just at inches right up to that level. Not that I bet that the market sells off, but because it can, the risk and reward is just too bad for me to want to take a decent trade. On this particular run today, the Nasdaq's gonna have a pivot point right here at this green line. Nasdaq is untradeable with micros. Yeah, for real. Keep range in 30, 40. Yeah, that's it. That's what I'm saying. Like this is just, I mean, I could see this all morning. This is gonna be choppy BS trading. So I don't trade. I had so many sit out signals today for this to just not play this. I'm waiting to see a bigger move to finish out the day to get a good long to end out the day. So ideally it would be kind of nice if this were to try to sell a certain amount for me to finish the day long. But 60-68 was my call for the high of the day. That was where we are right now. So we'll see what happens. We'll see if this market loves or hates this level. Don't forget to sub the channel, you guys. So I'm going to do a drawing for lifetime. And if you are a member in the monthly plan, we're going to do a drawing for lifetime. Now, what I'm going to do is I'm going to give you a code word in the stream. That way, when I draw the name, if you can't give me the code word, I'm going to draw a name until someone that can. It's harder to do it's easier to do the go click a button, like drawing thing. But I have to verify that you're also a member. So the session is every single day, Ty. So we're doing it today. Every day we do a session, and then we get to class 20 and we start over. So we just loop around. So catch up today, because each class is different. Doesn't require knowledge of the previous classes. They're usually all independent. Each is over a different topic. So you probably won't feel lost, because the last the classes don't really, I think at the start is when they kind of tie together, but at the end, each class is a different indicator. So it's like, this is how this indicator works. That's how this one works. And they're all, so you'll be fine at the end. Today, we're going to cover this yellow line and red line. It requires no previous knowledge. It's like its own thing. Dom, do you count? Yeah, you count. Overtrading always takes away your profits. Yeah, I know, right? Yeah, I don't know. I classically am known as the dude that does not overtrade. No, it's for anybody that's a monthly member. So it's lifetime access to the platform. Lifetime access to the Zoom calls, lifetime access to the Zoom in general, all the tools you make on the platform. For life, and that's normally $4,000 for the lifetime. It's platform access, so you get full access to the trading platform forever, with no monthly fee anymore. Boring. All right, see what S&P is going to do at 68. It's still pushing. Does the platform connect to Apex accounts? It doesn't at this time. At some point, we've investigated going Rhythmic compatible. But right now, we're waiting for the industry because Rhythmic is kind of like a smaller subset of traders. So instead of changing the infrastructure for that, we're waiting for the industry to change to something we can connect to that's compatible. Like if they use CQG, which none of them do because CQG doesn't auto-liquidate, but I digress. Trade8 doesn't allow you to connect to their API. And if they change that, we'll change. As soon as the industry allows other people to tap in, you can trade their accounts on your platform. We'll build into that. How do you access the NQ symbol? You have to have an account with a futures broker. You have to connect your futures broker here. As long as you have a CQG compatible broker, you can connect CQG account here. Once you connect your CQG account and you're paying for data from your broker, we tunnel that data to the platform. So like, if you have all that set up, Mike, should be good. And if you do that, the symbols themselves are the CQG symbols. So you have to type in this whole thing, f.us.enqh25, as you see on the screen right here. So unfortunately, futures data, you got to go out and get that. I'm not betting that the market's going to push down, but it's fairly possible. Nasdaq, they're finding no selling pressure across the board. Market's so strong today, it's looking really good. I like it. Top step. So our top step was like having issues yesterday. People were buying a trade and getting out of a trade and blowing up their top step account with like a 3-point move. Is that true? How am I doing with my top step accounts? I'm doing pretty good. I'm not trading them until the ETF at Apex sale is over. Have not tried Take Profit Trader. Not yet. So instead of trying to do like all three at once, I think I'm gonna like do them in stages because I have 3 different goals. I want to get on the top step leaderboard, which means I got to get my payouts, my payout goals that I set for ETF and Apex. And when they have the sales, I usually give them like front and center, just to rotate in like what's hot at the time. Candle says bearish divergence right now. We'll see. Top step was crazy for you. You put your first trade on, tried to move your stop loss, and it said minus 198,000 and close your trade. Sure, I get it. You know what happens a lot of the time? And this has happened to me before. If you accidentally go in and you type in like I don't know, NQH5, which is the current contract. If you accidentally type in NQH6, I don't know if anybody else has done this, but a contract that doesn't exist yet, it's not trading yet. Like a year later on accident, the bid is like 0 and the ask is like way up here. So if you buy, you immediately blow up your account just by buying something. So there could be something like that where they're filling people on the wrong contract. Because that happens, like you just push a button and your account is like negative. I've blown up evals that way on accident by just accidentally typing the wrong contract habitually. Have y'all done that before? Yeah, you put it, you actually trade the wrong year. And then because the price is at the bid. So you bought at the ask, and your P&L is based on the bid. So immediately you blow up your account just by buying. Yeah, I've made that mistake before, for sure. My fund of futures nice. Rules versus private target. I haven't gotten the point of payout yet, but I've heard others getting paid without issue. They're pretty good at paying out, so I've heard. Is Top Step refunding people at least, or like hooking you guys back up? Justin Trudeau just resigned. What? So is Canada and Greenland going to become states of the United States now, or what? We heard a lot buzz. Wait, oops. Hold on. I need to do that. Come on. There we go. Trying to make some space over here. As an Aussie, you're just gonna sit back and watch a show? Hopefully Top Step fixed you guys up. The Bears diverged from the other chart time frame you had on before this one. Pullback targets today, like I said, if I get any kind of end of the day pullback, I'd love to see Nasdaq, the bigger run. QQQ supports 520. That'd be the great setup to have. SPY supporting 595 would be the great bull setup to have. Like I said, I think today is nice and good and bullish. I don't bet. I'm betting anything bearish. You're going to pay out from Top Step. OD, let's go. Look at that, 60.68. Like I said, that's the target. Let's see if there's any kind of movement off of this. You have to come to today's class. We're covering this exact calculation. Super easy to do. The algorithm gives you the number. All you have to do is find out where you measure from. That part's easy. The problem is I don't have a good long pivot anywhere in time for the stream to catch up. I don't think we're gonna get close to these until the end of the day. If it does sell, it'd be nice. I'd like to see those closer towards the end of the day, but for now, I'm gonna take it easy. I'm gonna go hang out with the iDoc for a little bit. I'm gonna call it. No trades again for me today. Markets just trickled nowhere. I don't trade up against yellow lines, you know me. But we love y'all. Don't forget to sign up for the classes. We're going to do the drawing keyword. Oh, yeah, for the drawing. For the drawing. The keyword is pickle. Our dog's name. So I draw your name. You have to tell me the keyword pickle. Any monthly member can qualify. We're going to do drawing. If you're a monthly member, we're going to draw a random name and you get lifetime. Say the word pickle when I message you. When I message you. And say congratulations, you won. We're in the stream. You have to be in the stream. Don't say it now. Okay, monthly members. Go sign up for the monthly membership. And it's a chance for one lifetime membership, 4,000 bucks. You just had to buy the monthly plan. That's it. I'm going to do the drawing today, like later today. I can't do it like the other drawings because I have to go in there and actually make a list of all the names of people who are a member. You have to be a member to do it, so. You know what I can do? I could have been clever about this. You make a channel in Discord that only members have access to and tell you to go push the enter button. You know what? Let's do that. Hold on. I think I figured it out. Hold on. Okay, I got it. Wait, don't go anywhere. We're back. Don't go anywhere. Hold on. I lied. We're back. I got an idea. I figured it out. I'm going to make a channel in Discord that only members have access to. What? That way, I'm so smart. All right, okay, don't go anywhere. We'll do it on stream, whatever. All right, duplicate. We'll call it contest members. Okay. Where is this at? We're gonna do it like this. Contest members. Permissions. Pro and Pro Plus. Only. This will work. Sometimes I'm not a dummy. Add reactions, use emoji, read message history. Okay. Add reactions, use emoji. All right. Are we selling off yet? Market pullback. Daddy needs a dip. Okay. Save changes. All right. Now, as long as you're here, you can see the button. All right. All right. I'm going to give you guys 15 minutes to go enter. And if you haven't signed up yet, sign up. Here's another thing too for the monthly membership. Sign up. There's a 3-day money back. Sign up and you also enter. So you can enter, sign up, ask a refund, then enter, whatever. You can do that. Okay. Lifetime giveaway. And I promised you guys we would do it today. This is the faster thing. All right, select channel, contest, members, number winners 1. And the drawing will be at 11:10 a.m. Okay. All right, so now on the Discord, there's a channel there called Contest Members. I'm gonna give you guys a link. Only members can see it. All right, you guys click this. Here we go. Try this. Try this. Everyone click that link that goes to that message. Anybody that's a monthly member. Anybody. It's our Christmas giveaway that we said we're going to do, but didn't do because I was dead sick. Wasn't streaming. They moved the house. Everything got pushed back. Well, it was supposed to be for holiday season. All right. Go click that button. One winner, 11:10. I think it's working. You guys clicking the button? Did it work? Did it work? Okay. My bad on that. Code word should still apply. LOL. I know, like, sometimes I don't really think things through. Now it makes a lot of sense. Now you guys can see it. If you can't see it, it's because you're not a member. So you become a member very quick on the monthly. Go get the monthly stuff. Buy the monthly. Get access to Discord. Click the button. But the giveaways are, if you're in the stream, you can obviously be part of the giveaway. So today's bounce point, 60.68, boring markets. Red lines for ES nearby. Let's look. $59.75 on a downside move. That's it. Nice. This is a nice, strong bull market, man. It's good to see that bull market back. I'm really liking it. Let's clean that out. 806, 877 move. Oh yeah, this kind of move like this and bounce on DD band to get some momentum like that. It's really strong. This is a really strong bull move. In the overnight, I don't expect this to sell off at all. I expect this to be solid, at least going into tomorrow. Be good. Do you only 65? Yeah, you just need above 50. That's it. 65 is good enough. All right. We got 10 minutes until the giveaway. Click that button. Let me give it to you one more time. Lifetime giveaway. All you have to do is click this button. This button right here. Type it in chat. Click that link. There's a button. Click the button. So if you don't see it because you're not a member. So this is a drawing for members only. It won't work for you? Wait, what happens when you click it? Did it work? Go to this channel. Hold on. It didn't work. Wait, what happens when you... What? You guys got 10 minutes. What happens when you click the button? You have to be a member, number one, and you have to be in our Discord and have access to the Discord. So if you are a member, say, I'm a member and it didn't work, and we'll figure it out. Let me go give the timer more time. All right, y'all gonna make me say like 10 more minutes. Here, you need to have purchased this product for it to work. If it's not working, so you're not a member. So I just posted a link. That's a link to become a member. Oh, snap. Look at that market moving. Look at that market moving. Market's moving a little bit. Nasdaq retraced. 877. 6068. I don't think the market's going to sell off today, but I think that's a pretty decent movement. What happens when you click it, Mike? It says giveaway entered. It means you entered. So you're good. Excellent. Yes, sir. Good deal. Good deal. All right. So if you have access, if you're a pro member, it means you have access to the monthly membership. Again, here's the link to get the monthly membership. It's $100 for the first month to try it out. You enter into the $4,000 drawing. So you have to buy this thing that is posted. Then you go to your dashboard, you claim, you get access to the Discord, and then you click the other link I posted, which is to the channel that has a contest in it. I extended it like 20 more minutes. So you guys have 20 minutes to go get the stuff. All right, again, let me reiterate. Click this link that I type in and put in chat right now. I'm going to type in a link. Click this link that I type in. You're clicking the other links of the bot. Click this link right here. Matt is going to post a link right here. Boom. This right here. This link. Click this link. I'm gonna post it a second time. There you go. So if you remember, click that, click enter. You're good. Sorry about that. My bad. Okay, let's take a look at this. So those of you like Carrot and Cameron, make sure y'all click the link. It says no text. What does it mean? Did you get access to the Discord roles? Message me in Discord so I can give you access to the roles. You have to actually, if you just signed up, you have to go through one more step on the dashboard of Rocketplace to get your roles. You go to My Purchases and click Claim, or send me a Discord message, Carrot, and I'll give you access. Message me real quick. You got like 14 minutes. Cameron, you got to get access. Step 2, go to Rocketplace, log in, or just message me a Discord as quick as you can. Go in the Ask for Help, or message me directly, or go to Rocketplace. Dashboard, My Purchases. This is the way you should do it. Click Claim to get Discord access. So that's 5 different ways you can get access to the channel. All right. So you guys got 10 minutes. Cameron, Carrot, 10 minutes to do one of these two things. The fastest way is to message me now into the Ask for Help channel. So you go to Discord, you should see like 5 channels there if you don't have access. One of them says Ask for Help. Go there, type, hey, it's me. And I'll give you the access real quick. You got 13 minutes. So today, January 9th, 8:30 a.m. CT. Early closes 5 p.m. Reopen for Friday. Oh, you mean for Jimmy Carter's funeral? All right, so Cameron, I'll get you access real quick. What's up? All right, Carrot, same thing. All right, Cameron, you're good. Carrot Head. Cameron, I got you. Also, it's a shame you guys aren't already members. Carrot Head. Carrot Head. Directions. Go to the channel called Ask for Help. Type, hey, it's me. I get you, Cam. Go to our Discord. There's the link. Ask for help. So, Carrot Head, click that link. Gotta get you quick. You got 10 minutes. How you can hire me as a prop firm salesman? I'm not like a prop firm salesman. What prop firm do you work for? I'm about to run a prop firm podcast. You wanna? Which prop firm, Mike, do you work with? We can get you on the podcast. We can talk about your stuff. Free. That's free. And for any inquiries or business inquiries or partnership inquiries, I'm at Traders Paradise on Twitter. You always message me there. How to enter the giveaway? You have to be a member for Rogue. You have to have bought this thing. I just posted a link just now. You have to have posted this or part of our monthly membership. So the bot just reposted it too. All right. Carrot Head, you got 8 minutes, dude. You there? All right. Maybe he's fumbling through different apps on his phone. That's probably didn't hear me. Let me message him real quick. I don't know. His name isn't Carrot Head either. Who just joined the Discord? Carrot Head. But yes, for any business inquiries, you can email matt@rocketscooter.com or message me on Twitter at Traders Paradise. Just join. What's your name? Quick, what's your name? Carrot Head, what's your name? What's your Discord name? It doesn't show you in the Discord. You didn't join. Oh, go here. Go here. Photo finish. Click this link. I just typed it in. Click that link, and as soon as you get there, I'll give you access. The 99, Joe. Just the 99. It's a month. It's a monthly member, not the courses. So monthly members only. We do drawings every once in a while. All right, Carrot Head, join that link. Join it. You got it. He's in. The man is in. All right, Carrot. One more place you have to go. Scroll down to contest members. And click enter. The photo finish. Or I'll click the link for you. Or this link. This link. He's in. Do you guys like, and I know people come here and they're like, is this guy trading? What's he doing? Did I not tell you that it's going to be garbage trading today? I mean, come on out. I can see good moves. There's no good moves. Choppy, up and down. NASDAQ, up or down 20, 30 points. Nothing big to touch. Kind of boring, kind of blah. You're welcome, right? You guys get to learn a little bit today. Joined, we can't find the link. Jason, we got... Oh my goodness. Let me find you too, bud. The link to... All right, let's get you. Message. Members. Ton of members. All right. What's your name? Jason. Oh, Callahan. Oh, I found you. Okay. Found you. Okay. The link is... I keep posting the link. Go to where it says Day Trading with Matt. I posted discordapp.com. Click that link. Scroll up like 10 lines. Carrot Head found us. Jason, you got it, dude. You find it? How long is the ETF sale going on? That's a good question. Let me ask him. How can you predict volume spikes using options? So pretty quickly, super easy. The idea is that S&P, the index, has instruments like SPY. The Apex code is only good for 50% off. Well, it's because their sale is over now. I need to actually change what the bot is saying. The Apex sale is over, so now it's back to 50% off. Yeah, my bad. I need to actually change. Let me change that real quick. I need to get better at changing these. Like when they end their sale, I need to be like on top of it. Okay, 50% off now. So basically, when you can find high volume pivots in SPY, you can find high volume pivots in futures. You can use options, forecast volume. An example is if I sold a call that goes in the money, you're likely to buy 100 shares because you owe me 100 shares. Or sorry, I owe you 100 shares if I sold a call and you bought a call from me. So at that space, at some point in time, I have to buy 100 shares. And so that logic, we use Black-Scholes and all the Greeks to find out the net flow of volume based on market makers forcibly balancing their risk to zero, because that's what they're trying to do. So if we can identify which options belong to zero risk trades, which we can do, we have a team of engineers and mathematicians that put together this stuff. These are all invented here. And the idea is with Black-Scholes, you can predict volume. That's exactly what Black-Scholes is designed to do, to tell you the risk of the options. Black-Scholes prices options. And so when options have a value, you can calculate their residual value in the market of how many shares are needed to balance that based on an implied hedging model. So from there, we can calculate high volume. And from there, we can tell you where high volume pivots can be based on different things that we're exploiting. This is monthly options gamma balance. This is weekly option gamma balance. And so an example is if SPY were to sell today, which it's not selling, but there's going to be a predictable high volume at this hedge pressure, this orange one. And then the idea is above here, the flow is more long than short because that's where the balance is. And then below it, it's more short than long. So if I'm a trader and markets are falling, this isn't bearish. It's just falling in bull territory. I make a bet where the high volume is going to be that it supports. Now, statistically, it takes a large event for you to go from this side of orange to that side of orange, like a catalyst or a news event or something, because Wall Street doesn't flip-flop its entirety of positions for no reason. So the statistics of opening and closing on the same side of this orange is actually 90% of days. 9 out of 10 days will remain on the same side of orange that they opened in. 8 out of 10 days will stay on the same side of blue. That's how it's good. But see, Muhammad, what you're looking at, it's not that the exercise is what causes the flow, because exercising is random. You don't know when it's going to be exercised. It's the hedging. So as price of the underlying goes up, people are going to delta hedge. They're going to buy in real time, buying and selling in real time forever, as long as the options trade is open. You nailed it. So it's not the exercising they're worried about. It's the hedging. So your buying power, your available buying power is based on, for instance, how much you have, how much risk, or like how under you are, right? So if you sold a call and markets go up, your buying power goes down. So you get margin credit if you go out there and delta hedge. So if I sold a call, but then I bought 50 shares at delta 50, then I'm neutral, and therefore I got margin credit. I can continue to hedge and continue to trade the market. So when you effectively hedge exposed options positions, you get margin back, right? So delta hedging takes place in real time. So what this is actually doing is using delta hedging to bounce that. Now I tell you guys, Muhammad and Taylor, give me like some random stocks and I'll just pull some random stuff up and I'll show you kind of how volume is predictable. There's a bunch of protocol we do, but in the class, you'll learn what it is. It's a whole new way to trade and to read the markets. So an example is the net flow path is gamma positive. So all above this orange, there's just long trades. And as you see this today, all above this orange, there's all long trades. Nobody here is fading anything because the flow is more likely to sustain in the direction it was going rather than fade out, because you need everyone on Wall Street to change their mind to go to gamma negative. To, like, the majority of firms need to dump their position. And right now when the market's so strongly bullish and there's no event today, no news event after the services PMI, probability is very low. The market's just going to crash out of nowhere, right? So Taylor, good question. You don't know, you just have probabilities. So like I said, 90% of days will stay on the same side of orange and 80% will stay on the same side of blue. These are actual back test numbers put together by a team of our volunteers in our group. So this is the actual back test numbers. So when market's trading, I just have a back pocket bounce point to where if it falls there, I got a long entry pivot to trade off of, as this is indicating there's flow that way. That's what I do. The volume spike is a mix of bulls and bears. Oh, timer. All right, contest. I'll finish explaining in just a second. The winner is Take Flight. Man. Good job. Congrats. Take Flight is the winner. Let's go. Andrew, big winner. Jeez. Maybe karma's favoring you. Andrew volunteered back in the day. Yeah, nice job. Volunteered to do some back testing as well. Oh yeah, what's the password? well, he got it because he was here. He knew because he clicked the button. The button supersedes the password. Now there's an actual button. Okay, so like Taylor and Mohammed, let me like a couple things. Let me put in some random tickers. So the idea is that you're trying to weigh out probabilities, and so what you might see that's pretty neat is that if I know where high volume is going to be, and it's big, then I don't trade everywhere. Like an example, high volume is going to be here, high volume is going to be here, high volume is going to be here and here. So all throughout the day in Tesla, I only care about these 4 points. And as you see at the start of the day, there's always high volume at the open and this hedge pressure. As we fall to the closing price here and here, high volume here, as you see. And the monthly hedge pressure also is going to be volume. The closer you get to it, volume starts to kind of come out of nowhere. And let me zoom in on this a little bit better. Right? As you get close to it, there's just volume that approaches. It has to do with hedging. So maximum gamma is maximum delta hedging, which is maximum order flow. It's a mix of bulls or bears. And you'll never know how it plays out, to answer your question, Taylor. But it doesn't matter because statistically, you're betting on the idea that all of Wall Street doesn't change their mind in a heartbeat and dump. For the most part, as we've learned with the commitment of traders, we'll give you the example answer to that, is the commitment of traders is a chart that you can look at that shows you that Wall Street very rarely budges. It takes a lot to change the minds of Wall Street as a whole. For markets to like crash out and break through monthly hedge pressure, that's a big bearish thing for like the month scale. And you need everybody basically flipping their mind. So it's going to usually take a big event for that to happen. Commitment of traders is a chart that shows you active open futures positions. And one of the takeaways I just want you to know, without going too detailed of what this is showing you, this is the S&P futures. NASDAQ has one as well. All your futures contract has them. And it shows you the open and close, the open, long, and short contracts people have. And so here, as you see, the asset managers, which are basically your, big institutional long only positions, for the most part, since October of 2022, have just been long and holding. You see how very rarely are they budging? Even lately, they're barely budging. So you kind of need everybody to start selling their stuff week over week. This is a 1 week data point. So that you need less and less people long this thing for markets to pull back. So in reality, because Wall Street barely budges, especially in a bull market, that's where you get those 80 and 90 percentiles, because very rarely is Wall Street going to all get together at the same time, at the same place, and say, we're all dumping right now with no event. So you're betting on, as long as there's no news, the most probable path is the predicted flow path. And again, you can't predict the stock market, but this is so much better than TA because it's utilizing something that is predictable, which is volume. Like if you put any ticker in here that touches either one of these hedge pressures, you're going to get volume. Doesn't matter what it is. I don't know if any of them actually interacted with their places today. The open is always going to be high volume. You are correct. But there are other things. There's other volume that's predictable. There's other high volume pivots predictable. The opening volume is set by the dealers, right, on the MOO where they gap the price open. But this has to do with automated hedging. This is forced hand trading. What you see here and what you see here, look, Amazon. Can I show you something? Watch this. That's an example. Taylor, are we on the same page here? Yes, the volume at the open is always high, but excluding the open, what is the highest volume on this chart? You can clearly see it's right here as we're selling to hedge pressure. You see that? That's the highest volume of the day. And 80% of days will stay on the same side. It takes a lot of selling volume in the other direction to kick it the other way around. So the battle to hedge here is usually won by the bulls 80% of the time. That's what that tells you. So in the example of Tesla or Amazon opens and is selling and is selling and selling, and then bears will come in straight to short. I am waiting to buy at blue to trade right back to open. So what you see on the right is this dark black dot is the open. This is actually the open, the price. This is the hedge pressure. So today, open, blue open is a scalp. It's a balancing act between the hedging here and the selling at the open. Pretty cool, right? So the idea is we're looking at liquidity maps because that's where liquidity is. This particular spot is high activity due to delta hedging. This particular spot is the activity from institutional MOO orders, right? And the opening gap always has the highest volume at the open and the close. And everywhere between hedge pressure and monthly hedge pressure provide volume pivots. So in the example of Amazon, I'm not using any technical indicators or anything. I'm making decisions at just a couple of places. Amazon opens here. It's bullish. If the open supports, it goes to next resistance. That's this trade right here. 1A from the letter right there from the guide. If it opens and if it falls, hedge pressure kicks it right back up. If it opens, if it falls, hedge pressure kicks it right back up. That's 1B. You see that? These are printed at 9:30 in the morning before the day even starts. And Taylor, that's where it's important. I know where the flow path is likely to hook with the highest probability. All things being equal, if there's no event and no news and no any other reason for markets to move, this is a constant wind on the market, right? It still doesn't give you a tendency. It does. The win rate I have reflects the probabilities there. Yeah. That's how it works. So the risk and reward is pretty easy. I mean, you can't argue with this. At 9:30, before any of these candles happen, there is a box that says this. This exact distance is $1.50. If I set a stop loss at 75 cents, I now have a 2-to-1 trade, longing from here, exiting there, and closing out the stop there. So because I can bet where flow paths will be, I can set my risk and reward appropriately. And I do. And I always tell people, you have any question about that, you can watch me trade or watch me trade live. Answer all the questions. If it behooves you, I just won a global trading competition in futures using only this. Many hundreds of competitors. I had 500% gain in the course of a month. It doesn't mean that your results will ever mirror that. That's not what I'm saying. I'm just saying it does do what I say it does for my trading style. I do it because I do it. I only use liquidity maps and like our tools here, nothing else. I don't use any other tool. So IK, I posted a link. Day trading with Matt posted a link. That's it. So the idea is that because there is positive delta and gamma hedging here, it's automated buying that you can predict. You can predict there will be automated buying 100% of the time, automated. But the problem is you don't know if that's going to overwhelm the market natural selling that you can't predict. So what humans are doing, you can't predict. That part is random. The automated buying is the strongest here. As I teach you, we predict that, which is the highest volume spike of the day in Amazon. So the example is there is automated buying. It's like a constant wind. Like imagine an airplane flying and there's a wind blowing this way. The airplane's kind of being pushed this way. Now you can steer into it to correct, or you can overcorrect. But the idea is that there, at least all things being equal, is a more long tendency than short tendency. And everything else, the natural buying and selling of the market of people, you can't predict that or predict it the best way that you can. But that part is random. So if you remove the random elements of the market, the consistent framework underneath it is bullish, right? So when I did that trading contest, Taylor, this was that. This is exactly the stats of the contest. So this is, I tweeted this, by the way, and then I also tweet my statements and I tweet my bank deposits. I tweet everything. I tweet all my payouts, all that stuff. But this was the actual stats that I had from a 10K start in this contest. So there's all the stuff. There's my win rate right here for a month of trading. 1,532 trades, 80% or 70%. I have a very high win rate, and I don't trade a lot, Taylor. I actually am one of the few traders out there that has an edge. People with a real edge typically don't trade a lot, and they have one thing they do that they do well. And I do. I'm in that one of the unheard of categories, for sure. Some of the setups I do are like 90%. I'm sorry. No, you guys can hear me, right? Some of the setups I do are like 90% probabilities. And I only take them if the R&R is good, so. It's where market makers have to buy or sell to get a delta neutral position, is what Neil said. That's all you need to know about the levels and totally worth a try. The idea is that because you can forecast where volume can be, at minimum, at face value, it reduces all available prices to just areas that matter, so you're not over trading. Like, that's the way I always tell people. Like, I'm only trading where it matters. I'm not trading anywhere else. That's kind of the point, right? Yeah, so if you think about it, Taylor, there's different maps for different circumstances. Every day is different. So this is the net of them. This is all the different ones. Sometimes they're bullish, sometimes they're bearish. But either way, what it's actually doing is the open price. Each one of these has a story. I'll tell you this one. BLU is the easiest one. The market gaps up with hedge pressure below. Sometimes hedge pressure will be above. It's not always the case. So Taylor, like sometimes hedge pressure will be there. That's called a BSU. So sometimes you'll wake up and you'll have this particular thing where you open below hedge pressure. So in this particular case, blue is above. So the structure is different every day, but there's a flow path for every structure. Does that make sense? You're thinking anecdotally about the market gapping up puts any kind of weight on this. It has nothing to do with this, right? So you're good at thinking like that, but the idea is that no matter where you are, there's a flow path. So the example, a little more detail, is that this is the weekly, what this actually is the gamma maximum, gamma exposure of just zero risk options trades. So these are options that our algorithm believes belong to market makers. So therefore, because they try to zero their risk, they're actively delta hedging. As price is moving, they're longing and shorting all day long to balance it to neutral. So that delta neutralization process is maximized when the gamma is maximum, because gamma is the first derivative of delta. Okay? Related to price at a fixed time constant and other parameters. So you do the partial differential equation of Black-Scholes, you get the same equation. So The D delta over D price is another fancy word for change in delta, so the change in delta is maximum at the gamma maximum, which is here. So if the change in delta is maximum, then the amount of delta hedging is maximum, meaning the amount of order flow due to delta hedging is maximum. So that's how the math works out. So gamma max is a fancy word for high volume due to delta hedging. That's exactly what that means. And the idea that we have a zero risk trade is isolating just the options that are likely to delta hedge. If you buy like out of the money Tesla calls, nobody's hedging against it because it's so far out of the money, they may not even have any risk on the table. But this is for options that we calculate have risk on the table, right? Are they pairing your orders in live market? That's exactly how we find them. It's exactly what we're doing. We watch the real-time options flow. We get the data feed from Opera. We get the real-time futures data. We get the real-time underlying data in SPY, and we watch all of it at the same time. We have an army of server computers crunching real-time price data in real time, looking for those tandem trades that you mentioned. And that's how we extract those options. So like I'm an engineer by background. So data and data mining is my specialty. That's kind of what I do. So you're exactly right. They're pairing your orders in live market. We look for pairs. We look for somebody buying a large Amazon position and for dealers to have to short that and buy options elsewhere. So we find that connected trade, we call them tandem trades, then we isolate the market maker options from it. And that's how we get our gamma exposure model to be actionable. And like I tell people, the funny thing I tell people is that I don't like pre-prepare this knowledge, but I make a bet with you. And I make this following bet. I can do something right now that is 100% guaranteed, and I'll do it live for you, and I'll even let you control the experiment. Does that sound good? I will have a 100% success rate with what I'm about to ask you to do. And I want you to give me 10 random stock tickers, random, live on stream, and I will show you that hedge pressure and monthly hedge pressure, bull zone, bear zone, produce volume. And also, we will count the percentages, right? Okay, so if you interact with either one of these things, there's going to be high volume. So all it does is just tell me to look for it. It's a whole new way of thinking about markets. It's about time you guys have an engineer come on board to kind of look at stuff. All right, so our data points that produce volume: bull zone bottom, bear zone top, and hedge pressures. Okay, here's your bull zone bottom, bear zone top. There's your volume spike. Here's your hedge pressure. There's your volume spike. You'll see that. Here's your bear zone top, volume spike. We are 1 for 1 on Palantir. Okay, so I'll make a list over here. How do I know if the options were sold and not bought? That doesn't. Think about that question. Every option that was sold was bought. There's always a buyer and seller. What you mean was, how was that option created versus not exchanged? So what you're really trying to say, AL, is if I wrote an option versus I handed you an option I already had. And the volume, you wouldn't be able to tell. That is correct. So in the time and sales, you just see a trade. There is a seller for every buyer. So AL, what you actually meant to say was, how do I know if it was created or destroyed? Because there's a tandem trade. So the example is, if I see 100,000 shares of Amazon bought, right, against the market with an ask price that is, I don't know, 1,000, right? And I don't see the price move really, really, really far. Okay, so I just see a trade of 100,000. That's it. And the ask price is small. Price doesn't jump up. So chances are liquidity was injected. If at the same time, over in the options world, I see a trade, somebody bought or sold, it doesn't matter. So there's a trader that longed this, which means a dealer likely shorted to them. If the liquidity wasn't there, they injected it. Therefore, they shorted, they went and bought a call. Roughly 1,000 calls or less to delta hedge. Okay? So we tandem all of that together and we look for that evidence in real time. So the idea is we make an inference, right? It's a model. Nobody knows, but you have to, nobody knows, but like you said, you had to make a guess. So in this particular example, there's a high probability that within an appropriate amount of time that these are all tethered together. They're all part of the same trade. So because I see this particular setup, I see a trade in the underlying and I see a trade in options. They're tethered together. And therefore with that, I take this number and we apply a hedging model to assume a certain amount of hedging takes place. So I assume a certain delta hedging model on these calls. So ideally, in this particular example, I make the assumption that these calls were created. And they added to the open interest, etc. Because that liquidity wasn't already there. And it's an assumption you have to make. But you can't, nobody can see me on the veil because Opera doesn't know the real-time open interest. Even the options authority doesn't know that. They only accumulate that data once a day at the end of the day after everyone reports. But the idea is we have an algorithm that sorts this out and makes a really solid assumption. And the idea is that it's the best you can do because you don't have that visibility. So AL, I'm not, one of the things I don't do is tell you what I look at. So what the example I gave you is one of a ton of things that we sniff for. So one thing we don't do for protection of the IP is actually tell you what we utilize to guess if an option is created, what we do to guess if the options belong to a tandem trade, what other hedging metrics we look at. But we look at a lot of them. So an example is, right, I told you guys, give me like 10 random tickers, but the proof comes down to the idea is that these hedge pressures are going to produce severely high volume spikes out of nowhere when you get to them. What causes the repeatability is the delta hedging right now. So how strong it is that 100% of the time it predicts high volume at these levels I told you about. So Palantir, I'm going to check off. If you give me 10 random tickers before I get out of here, you guys literally type in 10 stocks, random. And I'll show you the following. That these are two different protocols, what we call bull zone and bear zone, and hedge pressures are both going to be high volume. As you interact with here, 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 high volume. So throughout the entire day, the areas of interest of me trading Palantir is 78, 77, and 75. The only places I care is the only places traders are going to be. So 100%. That's a stiff claim, but I'll prove it live on air, and you guys get to pick the experiment. So it's a totally different thing. And it may sound like we got some crystal ball, but we're just mathematicians that decoded Black-Scholes. I mean, there's nothing magic about that. Black-Scholes literally spells out the value of options versus parameters. And if you know the price of option, you can reverse engineer the risk inside of it. So, I mean, that was a very simple thing for a mathematician to do, somebody who's trained in that kind of math. So coin, okay. So let's see what coin does, right? The degree and the amount of volume is random, but relative to the current traded volume, you will see a little bit of extra volume. Now, especially here, as the opening volume decays a little bit, you can see that the press through hedge pressure creates a little activity. Now, at the start of the day, it's a little harder to see because relative to the opening volume, there's still that mess, but you will still see that there's relative volume change there. As you break through hedge pressure, causes a gamma squeeze, which creates additional volume. There's no other interaction points, unfortunately, for coin. So let's move to the next one. When it happens in the first 5 minutes, it gets blended in with the opening volume. So it's not as prominent, but I mean, you can't argue with this one for Baba. There's your volume spike. Any questions? Okay. What's the next one? Exactly here at 86. 86 the point of interest. And as you see right now, the map has slipped to BSD where that blue is now giving that resistance pressure as one would expect as you break through hedge pressure. Now, Bob is in a delta event at this moment. SMCI. Some stocks we don't have liquidity maps for. So this one, unfortunately, we don't have a map for. We didn't pull one. We didn't pull a map today. And MSTR is not, it's like SMCI. The newer hot stocks aren't on our list. So we need to update our list to start adding them. We didn't do any calculation for these today, unfortunately. Price isn't reacting to the upside there. But the thing is that it's probabilistic, Taylor. Like the market is random. Why did I type your name, Taylor? Which one was it? Baba. So what happens is the market has a trade setup, okay? When this was a BLU, as you see, BLU open, blue open. We talked about that trade earlier with the S&P. Open, blue, open is one trade that worked. I always close at the tail of the arrow, the tip of the arrow. Open, blue, open, worked a second time. It's scalping between high volume pivots. That's what this is. You're still stuck on predicting direction. And so what we do as traders is we're only reacting to the imbalances in the balancing act. We're not trying to predict direction. So BLU worked twice. BSU is a sell-off from here to there, which is this particular map down here. This is BSU zone, BLU zone. So I can plan whatever trade I want. If I'm a bull, I'm longing from there to there and then taking the next long from there to next resistance. If I'm a bear, I'm just waiting for blue to break and then I'm taking my short to there. So you can tell the difference between where bull and bear territory flip. BSD is bearish here. This is very bearish setup if you lose 86. So BABA has now flipped to bear territory where now the delta is negative. This is where I'm a bull. So an example, if I'm long BABA for the long haul and BABA breaks this, I need to be hedged my investment. That's how I see it, right? So that's what we're saying. The reaction is that I'm trading from pivot to pivot every time. So the BLU, if you remember, is open, blue, open, is a scalp. I buy there, I double there, I close there. So I buy, double, close. And I do that trade all day long. It's one of my favorite ones. A couple more. GME. Yeah. Oh, shit. Are we selling? I like it. GameStop, relatively speaking. Here's hedge pressure. Here's hedge pressure. There's high volume and there's high volume relative to where you're trading. Okay. GameStop, BLD. BLD is bullish from blue. Bullish from blue. So you can go through as many of these as you want. Without a catalyst, the market tends to follow the same flow path. Ooh, 60-50, huh? How far are we selling? Hopefully we get close to it. But one thing is that you got stick around long enough, Taylor. You'll see like how I apply this stuff. And it's really, like I say, nobody can predict the stock market. This is just showing the volume flow. But we found out through observation is that 90% of the time when it comes relative to monthly gamma exposure, the volume flow is predictable of the direction because it takes so many hundreds and hundreds and hundreds of millions of dollars of risk to flip the market around. So what you bet is without an event, probability is very small that that much is liquidated to domino the market the other way, if that makes any sense. So Microsoft, BLD. BLD has long pressure from orange pushing it, long pressure from orange pushing it, and most days it's honored. And that's just because of that one particular thing. That makes sense, right? ARW. What is that? I don't even know all the stocks. Some of them, again, on our list, we don't have a liquidity map for that one. Diana ES, not yet. I mean, how did I do with 6068? I told you guys, if we rejected off of that, you got to take the class. We're teaching this line today. This is called, so another thing, Taylor, that when we're talking about liquidity map is one of a bunch of indicators we have. What we do is we exploit mechanical parts of the market. 6068 is a number that I drew a month ago. It's not a support and resistance pivot based on anything. This is a calculation given to me from this table right here, and it's a number based on something called the margin buffer limit, which has to do with protocols on the Globex. So other things we exploit are things on the Globex itself. We exploit velocity logic, we exploit the IOP, we exploit the margin buffer limit, we exploit CME span, and through those things, we can come up with other high volume pivots based on other control elements to the casino itself. This particular pivot is high volume every time you touch it, calculated months ago. And there it is right there. So a lot of these actionable points we can just find out. So hopefully what you'll find is that all of our stuff is based on something mechanical. Hedging, mechanical, which means it's repeatable to a degree, right? What I think of the wick off method, I actually don't even know what that is. Let me read about it really quick. Determine market trends. Let's find out. I don't really look at a lot of this like anecdotal evidence type trading mechanisms. I'm looking at mechanical things. Delta hedging, because everyone does it, is mechanically repeatable. Everyone does it the same way. That's what makes it work. Margin buffer limit has to do with market makers. There's a high probability of us selling from there, which is why I didn't long today. I sat out and the market has gone predictably nowhere, just slightly up, slightly down, which again, because I knew that I sat out. Didn't do anything. You have to teach me about whatever Wyckoff method is. I can't even find a good summary on it. Wyckoff market analysis chartschool.com. What is this? All right. Using charting, distribution, markup, accumulation, markdown. It's using price action and shape of price to predict markets. I'm a big proponent against stuff like this, but let me, again, on the surface, I can't read it. So my background in mathematics and as an engineer, I care only about things that have statistical value. So this looks like it's looking at the shape of chart over time and direction of chart to make inferences about what the market's doing. Not like it's a bad thing. Clearly it's a decent, like it looks like down here, there's accumulation, which people are buying and selling, market's liquid, maybe, right? Nothing terrible. But as far as like predictability, I don't think any kind of chart or shaping of chart can predict the stock market. And I've always been a proponent against that. I'm in the Jim Simons camp of hedge fund managers who say the stock market's random and you can't really tell much from a chart. Instead, we use quantitative methods to make our bets, right? Rule number 1, don't expect the market to behave exactly the same way twice. Okay. I like that. The market's an artist, not a computer. False, but the market is a computer, literally is a computer these days. The market is roughly, I would say, most days, maybe 20% artist and 80% computer. The market makers of the futures market, ever since the open outcry pits were closed down, are 100% a computer, 100% of the time. So the idea that the market has randomness is probably the way to put it, and not predictable to a degree. But the idea is the markets, for the most part, are mostly computers now. The majority of market trading is computational. Automated liquidity provision, mobilizing liquidity, market making, all that stuff is done with algorithms and not people. It's just repertoire of basic behavior patterns. So the idea is, now that I'm reading this, is chart patterns were stronger back in the day when it was more like humans trading and humans making markets. Yes, there were patterns. But what traders are not understanding is that in the modern day, as everything is becoming more computational and run by computers, computers follow strict rules as they're programmed to do so. So in the modern day, chart patterns are becoming weaker and weaker and weaker the more that computational methods have taken over market making rather than humans. And the computers, humans do like unrepeatable, artistic behaviors. I agree to this. In the 1960s, the 1980s, this was probably very strong. In the 2020s, chart patterns, to what I believe, I'm in the camp right now. The chart patterns are 100% useless. Can't hear me? Check. My bad. So like, not like it's a bad thing, but as far as predictability, that the market doesn't really do. Patterns are good when you're looking at what humans do, and humans have patterns. That's the one way humans are predictable. We all, every human's slightly scared of heights. Every human's, slightly scared of loud noises. There's patterns humans do, even though we have free will. But computers, you don't have to find a pattern. A computer is logic, and there's no pattern. Logic is repeatable every time. So I'm in the camp that patterns have become less and less and less useful because computers are not even looking at charts anymore. Like liquidity providing Citadel, orders route through Citadel. They're looking at supply and demand like in real time. They're not, what's the chart look like? What do we quote the market at? It's not done anymore. It's done by human traders that run hedge funds and stuff. And traders like you and me still do this. But the majority of order flow is now like done completely differently. So while this is a great method, I don't disagree. It does do some pretty good rules of thumb. Market behavior is significant only when compared to what the market did yesterday. Hold on. Last week, last month, or even last year. There are no predetermined, never fail levels. The market always changes. Everything the market does today must be compared to what it did before. Nope. We teach the exact opposite of that. As a matter of fact, what we teach is that nothing that happened yesterday is important, don't we? So what we teach is at the start of the day, the following takes place. So the major premises of that, it's chart patterns based on the idea that the market cares about what happened yesterday. It doesn't. And let me prove it to you. There's a protocol at the start of the day called the MOO, market on open order. What that does is that every single person up to 10 minutes before the market opens, that's like institutional, can report, I want to buy 100,000 shares of this thing at the open of the market. And the market maker says, okay, thank you for your order. And then everyone submits, I want a long, I want a short, I want a long, I want a short. Everybody submits all of their stuff. All of that information, plus the distribution of orders on the bid and ask, are put into a logic machine that the market maker gaps the price to the highest liquid spot of the day based on the current supply and demand and imbalances from the previous day and at the open and the current distribution of risk. So when the market opens is a reset button based on the highest guessed liquid spot on the map. How do you know it's the highest liquid spot? Well, that's exactly what this protocol does. They're going to gap it to the place where they can match the most orders based on the available supply in the market. And because it's the highest volume of the day, the open and close, the close has a similar protocol called MOC. It's the opposite thing in reverse. You can sell at one price or buy at one price at the open. Because they're the highest volume, they are in fact the highest liquid spot. And therefore the market gaps to the highest liquid spot every day, which means it's the newest balance point. So whatever happened previously has no effect on the current balance point today. This is current supply and demand. So I teach the exact opposite of that. That the idea is that whatever happened previously doesn't matter. And case in point, I never look at historic charts. Ever. I open up a 1-minute chart on SPY today and I trade S&P futures. And not to say that this is you or mirror it. I never, ever, 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 ever look at a chart before today. And if it means anything to you on is that useful information, you decide. But I never look at historic charts, not once, and I win trading contests. Doesn't mean that's going to be you, but I can prove that it's not necessary for me. And that's because when you open and close the market, it's a high liquid spot, it resets. Does my software take the thinking out of trading? Nothing can take the thinking out of trading. The thinking and planning and executing how much you trade is like really the art form of trading. How much you're willing to bet versus like the risk you're taking, right? Somebody says I'm so far ahead of the game. To me, I would say that is more so is that I'm looking at it differently than most people. Most people come in and say, what is everyone using? Let's do it. I come in and say stuff like Wyckoff method. It says humans have predictable behavior. Humans do some predictable things. And like, yeah, we do. But humans are no longer at the forefront of not only trading the market, but pricing the market. The majority of trading, the overwhelming majority of trading is done algorithmically these days. And computers don't randomly do stuff like humans do. There's no RNG method that says, you know, okay, algorithm, buy here 80% of the time, but roll the random dice and sometimes don't do it. Throw some random variables in there. Computers are going to follow strict logic. And so there is no pattern. It's the net sum of everyone's logic is just what happens. It's not even a pattern. It's 100% repeatable, but you don't know what everyone's logic, right, is. But you can guess certain things. There's certain pieces of it that are repeatable. So I believe that previous price doesn't matter. As a matter of fact, I don't even change the time frame on my chart number. I do the simplest thing out there, and I have one trading contest doing the simplest thing out there. I buy just where volume is going to be. I bet in the direction of the flow path every time. Very rarely do I short markets. Even in bear markets, I still find a lot of good bull trades. It's certain conditions I short on. I tend to long more often than not because the markets go up more often than not. And I tend to only trade where there's high volume. I never change my time frame on a chart. I never look at anything before today. I never look at chart patterns, candle patterns, pennants, flags, dinosaurs, turtle on a skateboard, whatever pattern you come out. I don't look at none of that stuff. None of that matters. I look at volume, where volume will be, and I bet in the direction of the flow every time. I do the same thing every time. Simpler. It's simpler analysis, but it's powerful because, you know, volume being more as time goes by, charts become less effective as more and more computers are trading the market. Time, like, you know, like the 1900s, okay, it's all humans at that point. People got their shit from newspapers. And then, like, you know, the 1950s, you had computers start becoming a thing. In the 70s, you start to see a lot more technical analysis was basically invented in this time. A lot of TA was invented in the 60s and 70s. Wilders came up with the RSI in like 1972. So the idea is that when you get to the 1990s, there's an exponential change in how market makers or how markets work. In 2003, the market was decimalized. If you don't even know, before 2003, the S&P would be trading at like 597 and 3/8. Your stock ticker went at eighths of a dollar on it. So even in 2003, things went decimal. So you had more granularity in your trading, 597.24. After this happened, and then roughly close to like maybe like 2014, 2015, the open outcry pits closed down in all the Chicago exchanges to where no more humans took over for futures. So the humans stopped making the market and the computers took over roughly in 2015. And the stock market, equities became decimalized roughly in 2003 and computers took over there. Specialists were replaced by computational market makers. And right about 2003 to 2015, there was an exponential dependency of computers running markets. So it's only a 20-year or less old thing that took over. So as time went by, the patterns effectiveness went away because there's no more patterns. As computers took over, humans did not. So human patterns are now just a coin flip. Oh shit, here we go. And my long entries. Let's see if I can get it. Maximum account you can trade with ETF is 20. So I love discussions like this because I'm not saying anybody else or their method is wrong, but for me, the effectiveness in the last 20 years has shifted away from patterns, TA, and charting and things like that have become less effective as computers take over. Case in point, the computers, Citadel is a machine that's this guy wants to buy. Okay, let's route it to, you know, the highest bidder kind of thing. It's not, there's no chart. It's not even looking at a chart when it makes this decision. So the idea that you can make a chart to predict the market is you're missing the greater piece of what the market's doing. It's looking for real-time supply and demand. It's looking for real-time order flow and real-time liquidity. So the idea is in the modern day, finding volume is finding liquidity. A bunch of buyers and sellers are going to be there and there. And then betting on who wins at that fight. Doesn't matter. I can't predict who wins at this fight, but what I can predict is that the big fight will be there. And this morning, 60.68 was also the big fight in S&P futures. So my bet is that who wins the fight, but at the right place. And that is the method that we train people on, is where's the right place to decide where the battle's going to be. Not just longing at random spots, but if I want to long the S&P or NASDAQ, I've got a really strong place to long from. I can long here, I can long here, right? But I'm not buying the dip at random spots. I'm going to buy where I know there's going to be a lot of volume. And that's kind of the approach that I take here when I trade. So, Glenn, you can trade 20 accounts with ETF. I think you can only fund like 5 fast tracks though, something like that. AI is going to take our jobs. Yeah, for the most part. People don't realize that the NASDAQ started in 1971. Computers are trading in the 70s. Actually, Matt is more correct than I didn't even say that. Computers like basically became a mainstay in like many different processes in the 50s. Like NASA had computers, you know. Computers were like big bulky things that took up rooms. I mean, they had, you know, mechanical computers in the 40s trying to decode the Enigma machine with Alan Turing, you know. So you had like mechanical and digital computers ramping up in the 70s.
And so there were, I didn't even know, I would agree with you, probably more computers were trading in the 70s than we give credit for. And it's crazy because in the 70s is when a lot of TA was invented. Bollinger Bands and RSIs and average ranges and stuff. Most of the TA came out in the 70s. I agree with you, man. Thoughts on VWAP? Yeah, VWAP is not a terrible thing, but the one thing I don't like particularly about VWAP, it is better than most other indicators. I'll give it that much credit. But the one thing particularly that I don't like about VWAP is it's using past price to imply future price, which is a principle that we also say in our method you can't do. Price can't predict itself. And the reason it can't predict itself, and I proved that pretty easily, is that if price could predict itself, then it would be predictable. Let's do it. Let's make a postulate. Okay, a postulate is a fact that you can't dispute. So a postulate is the straightest distance between any 2 points is a straight line. That's Euclid's postulate, right? Or that a point has no length, width, or breadth. Okay, so a postulate here is that, right, for price, is that price happens. Okay, there is a price, is a postulate. The market always has a price. Okay, we can agree there. Number two is that, so the hypothesis you have is that price can predict future price. Okay, and the postulate that I predict is that price, or the postulate that we state is that a fact that you can't disprove is that price is random. Price exists and price is random. So every single theory or technique we have here is seated on these two postulates. Like the straightest distance between 2 points is a line. You can't dispute that. In 3-dimensional or 2-dimensional space. If you go 40 or higher, I mean, you make multi-dimensional arguments, then we'll talk. But in every sense of Euclidean geometry, the shortest distance is 2 points. So we say that A, price exists. Okay, there is a price at all times. Okay, check. Price is random. Check. And price has a history. These are three things and none of us can dispute, right? These are all three postulates. Price has a history. Price history exists. So current price exists, a price history exists, and pricing is relatively random. So we built our techniques on that. If price exists and price is random, then price can't predict itself because it's random. Because the definition of random means the outcome cannot be determined. A coin flip, the statistics aren't random. A coin flip is roughly 50-50, but the actual outcome of a single coin flip is random. You can't come up with a correlation that determines the odds of that one thing happening right now. So by our definition of postulates, price can't predict itself. But let me go even further. Is that the reason price is random is because humans are doing random things. And so another thing to take place is a theory, right? The theory is this. If price goes up, makes your indicators go up. So you have indicators that cross over and they just did that. Okay, price went up, my moving average is separated. So therefore, because the change between point A and point B went up, then up implies up. So because price went up and the indicator indicated up, and the indicator, therefore, if it could predict price, indicates that price goes up even more, which forces the indicator to go up even more, which indicates that price should go up even more, which means the indicator should go up even more, which means price should go up even more. And because of that cascading effect, that if any function of price, so an indicator is a function of price. You take price, plug it in some math, and get an output, right? So if price itself, if a function of price could predict price, then price would indefinitely diverge to infinity. Because if the indicator implies up, price just goes straight up, which forces the indicator to make more people buy and more people buy and more people buy. And even as a self-fulfilling thing, markets don't go straight up to infinity. They ultimately sell, which means this act of price circularly referencing itself, which is what it's doing when you use indicators, is a failure to begin with. It can't predict price because at some point price turns around and comes down. And that thing had no predictability on that. A MACD would have no ability to tell you this is when price is going to come down. And for good reason, because it's circular reasoning. You put price into a function, they give you an output to guess what price is going to do. It's like saying, I'm true because I say I'm true. And that's a logical fallacy that any argument loses on. You can't just say that this is right because I say I'm right. People laugh at you when you say that. And when you do the logic and mathematics and price action, a technical indicator based on moving averages is just price shifted over and smoothed out. It's still price, just slightly different. So price can't self-imply itself, or else it would go straight to infinity. And it doesn't do that. So like the idea is that because of that, we make the assumption that you can't predict the stock market with indicators, with technical indicators, which leads us to postulate number 2 is that the price action is ultimately random. And so when we made a trading style here, how do we make a trade style on the fact that price history exists? But if price is random, then that doesn't matter. So therefore, we came to postulate number 4, which is history doesn't matter because price is random. So the history doesn't matter because it's random today. Isn't that cool? So that's how we actually came up with it. And case in point, you can watch me trade as long as you want. I don't use technical analysis. I don't use historic charts. I don't use anything. But it doesn't mean they're not useful. It just means in the modern day, there's better ways to do it. And that's kind of what you do. You think it's possible to create something that you can't predict? Well, yeah, you can. There's a logic there. You can create something you can't predict. Yeah, remember the old like argument? Can God create a stone that he can't lift? And the answer is he can. Because you have, in that math problem, you have to define what that thing is. So in the example, if you define God as an all-powerful being, meaning that infinite strength, then God, not able to lift a rock, would say that, you know, God is not God. But if you define God as infinite will, can create whatever God wants, and God can create a weakness for himself, which means I can create an ability for myself that can't lift the stone, and therefore God is still God. So the answer is, can you create something that you can't predict? It is very true. You can create something that has undecodable random number generator encrypted that you can't decode, and therefore you can create something that you can't determine the outcome on with the same logic. Yeah. Thank you for the explanations. No problem. If price was random, inside trading would be a thing. Inside trading is not traded on price action. Inside trading is traded on non-public news that's shared from executives of companies. Have you heard of moon phases? People trade on the weirdest shit. I'd like to get an MHP buy today. Material non-public information. Reading moon phase. Dude, there was a guy back in the day that traded oil, and he had a theory about sunspots. I can't make this shit up. How do you compare insider trading? I don't know. It sounds just like the same guy that comes here every day and heckles. They say dude and they say bro a lot. Can you create a decoder to decode the system you can't decode? Jake. But can you create a decoder to decode a system you get? Yeah, and then you exactly right. As a creator, there's a logic. You can solve the logic problem there. As a creator of a closed system with no entropy to the surroundings, you can create anything. Well, actually, you can create entropy to the surroundings. You can create a system that leaks information out that you can't know about, and therefore you can build a wall. As a creator of a system, depending on you create a reversible system where no entropy is exchanged outward, or an internal system where all internal energy is contained, you can create whatever rules you want for that system. So anybody can create a system they can't break. You can create something you can't decode. You can create a lock you can't open. You can create a gear you can't turn. Have y'all seen the gears? There's this, I forgot what it's called, but there are these gears, right? That there's like this machine, and they turn, like one gear turns every second, and then every time it turns around, this gear turns a tick, and every time it turns around, this gear turns a tick. And it said that would take like 650 bajillion, trillion, gajillion years for this gear to turn one notch. And so, yeah, you can create gears you can't even turn, because the torque required to spin that gear would be infinity. And if you tried to spin this gear, you wouldn't, because this gear would tangentially approach and go beyond the speed of light. So yeah, you can create mechanical systems you can't even move. Somebody did it. There's like this thing of gears, and you can't even I forgot what it's called, but yeah, y'all go look it up. That no amount of force in the universe can turn it. I mentioned torque. I did it. I did it. I'm not making it up. I don't know what it's called though. It's like a math. I think it was a math problem or something. I don't know if it's actually here. So, what was it called? I think it was actually a real thing though. Somebody did one time. Andrew said the gear turns it only once every 346 quintillion years. Is that it? Oh yeah, here it is. It is. That's right. That's right. Somebody was trying to mechanically create something of the magnitude of a Google. That's what it was. Yeah, so that is the thing. Like, so this is what I was talking about. Yeah. This gear turns once every 346 quintillion years. Yep, that's what it was. Yeah, the Google thing. Yeah, so it's a gear ratio problem. Yeah, it was an SAT question. The Google gear. Yeah, that's what it was. That's so fascinating, right? It requires so much energy and torque to spin that last gear that if you were able to do that, you would like the universe's fabric would like fall apart. You'd be creating like black holes and like deconstituting matter into like pure energy. That'd be kind of cool. Maybe Thanos had that power. Who knows? With the Infinity Stones. I'm still streaming for much longer than I thought I would be. Okay, so what am I looking for today is an MHP tap. So if we get the MHP tap on S&P today, here's a decent setup I like to do. Zarin, as Zamani said, market is random because you have multiple participants. That's exactly right. And the motivations of each individual participant aren't known. And therefore, you can't know the outcome. What everybody's motivations are different. Somebody may buy because they want the stock. Somebody may buy because they need to balance portfolio. Somebody may sell because they hate the stock. Somebody may sell because their daughter needs braces and they need the money. Motivations are never going to be known. And so you can't find out why people do what they do. Yeah. Why isn't top hedge funds and investment using candlestick charts instead of using level 3 data if price was random? Top institution hedge funds and investment banks, you don't know what they do. You're making stuff up. I know what they do. I have connections in so many different places. I know exactly what everyone does. So I can tell you right now, Citadel, which is the majority of all trading volume on planet Earth, uses 0 charts. I can guarantee you that for a fact. Everyone uses level 3 data for larger decisions and speculative trading, but speculative traders are such a small part, and a level 3 data is very, very small compared to current supply and demand. Everyone's motivations are different. The knowledge you're passing, Tay, that's what I just said. Level 3 data is data not available out to the outside world, to the outside investor, but that's done speculatively. Certain traders have the information they trade on, and again, that's even less impact it has on the market because not everyone's using it. So it doesn't make any sense to say that something a small subset of people have. It's like the fact that 1 out of 10,000 people you know has a Lamborghini, therefore everyone should have a Lamborghini. It doesn't make any sense. That one person's very wealthy and does very well, but Lamborghinis aren't widely available to everybody. You don't have one. So something that has a small effect, as you just said, can't also have a big effect, as you just said. You just contradicted yourself. If it's available to the average investor, then it's not behind the average investor's motivation to do anything. Therefore, it has almost limited, if not zero, impact on the market day to day. That doesn't make any sense. It literally makes zero sense. As you just stated, I agree with you 100% that it's not available to everybody, and therefore the day-to-day decisions, right, of most investors aren't utilizing it. Therefore, it's not useful. We agree. I agree with you, but you contradicted yourself, though. For something to be appropriately weighing itself on the market, everyone would have to be doing it, right? Here's a postulate. Everybody buys and nobody's selling, the market goes up. There's another one. Everyone's selling, nobody's buying, market goes down. If everybody's buying, yet 99% of people aren't using a single piece of information, the 99% of activity is not based on that information. I tend to struggle with the logic you're trying to give here, but then again, I may not be the level of genius you are. The average retail trader doesn't move the market at all. Oh, no. Have you heard of a stock called GameStop? I don't know. I think your knowledge of the market's extremely limited. I think the average retail investor gained, I don't know how many tens of thousands of % on that trade. Or every penny stock that gets pumped and dumped. Only retail traders move that stuff. As a matter of fact, farmers move the market more than level 3 data do, because farmers are applying supply and demand to hedge their crops. Even Farmer Joe in the middle of Idaho, hedging his corn crop, is putting more pressure on the market than level 3 data is, by the way. Because the hedge fund that's hedging his output to the supplier, people buying his corn to make high fructose corn syrup, is likely more hedged in the market than any level 3 data applied would actually do. Daily volume of retail traders. Oh my God, it's the same guy. It's the same guy. He's back. We knew it. The whole day, everyone's DMing me, hey, this is the same guy. The average daily volume of retail traders. It's that guy, everyone. Everyone say hello to the guy that comes on with 20 fake accounts every day. And when the mods ban him, he comes back. Just FYI, whoever you are, it is so weird that you do that. It's borderline pathetic, but it's weird. How many fake Google accounts do you have for your online life that you do? Question number 2. What's it like having no freckles? Because you've never seen the fucking sun. I wish I had plenty of freckles. I surf. But that's... What's it like? I wish I had beautiful skin. Once a stream. I get the weirdo. Here's a hint, it's less than 5%. He's teaching. He watches our stream every day. We knew it. We knew it was him. We knew it was him. What's the every day? What is the daily volume of retail traders? These are ridiculous questions that you ask. These are things that don't matter. Nobody cares. Secret admirer. Yeah, it's the guy. It's the guy that invites everybody to his house to throw a party. And then while they're all there, he tells them to turn the music down. And then he calls the cops on his own party. Because the music's too loud. He's that kind of guy. I'd like to report a noise complaint. The music's too loud at my house. They won't turn it down. I asked them, but they won't do it. Well, son, how many Google accounts did you have? Did you show them how many Google accounts you have? Maybe that would intimidate them. I showed them that I had 400 of them. I bought them on the black market, but it still didn't work. Nobody seems to like me. Well, son, we'll be there in a heartbeat. We're here. We're here to help. Thank you for calling the cops on your own party. Here, we're going to time him out for 24 hours. Is overnight volume calculated in, or do you focus on regular market volume? So the overnight volume is not important to the daily calculations, because the opening move, the opening price is still the most liquid spot, so it's like a reset button. Yeah. So as Mike said, MHP was hit pre-market. I tend to still make the attempt at the end of the day to take the long. Been here all day, just angry watching the stream. Let me tell you what it is. Here's a direct message to this guy. You know why he watches the stream? Because he himself has a trade room. He himself is selling something, and he himself is losing the race in this game to sell his product to everyone else out there. Because no one else would care what other people are doing unless they themselves are part of it. The only people who ever troll anybody are also other competitors in the space. So I guess I always wondered what it would be like if I were in his shoes, but I don't know. We do very well. I'd love to see his product. He's got something. Anyone that's got something to convince, they got something to sell. You wouldn't go out of your way to try to force people to be your friends. Unless you're the person that goes into like a restaurant and starts telling you, everybody pay attention to me. Hey, stop eating. Look at me. I'm here. That's the weirdest way to try to make friends, I guess. But I don't know. I'm just curious what it feels like to have nobody buy your product for obvious reasons. Ever. Like, nobody ever will. Or ever will again. For obvious reasons. It's got to feel odd, I guess. But yeah, I'd love to see what they're selling. You learned so much from Matt. It's nice. Matt should be a comedian, because I love when people come up. I'm pretty sharp and quick with words, so I'm a good heckler if people come in and be goofball. Goofball comes in here every single day. So I'm still waiting for my MHP tap to get my long on. Waiting all day for 595 down here at S&P. This product and you short only. But at the end of the day, let's do some basic math. Here's the score. Here's the score. Ready? Everybody knows some basic math, right? This is the score. How many times? I'm going to put Matt, and I'm going to put, I don't know, I'm going to make up something. Whatever this guy's name was. This guy, put a T here. All right, Matt, here's the score. Number of times Matt has ever watched or bought anything he sells, 0. Number of times he hangs out in my stream every day, all. That's the score. I get +1 to engagement. You guys get some entertainment. And all he's doing is making the channel grow. And that makes me happy. That actually puts money in my pocket. So thank you. I already forgot his name. Thank you, Guy, for adding $1 to my net worth every single day. Because every time you come, the algorithm shows me other people. If you watch a YouTube video for more than 30 seconds, the YouTube algorithm gives you exponential amount of impressions over the previous person that looked at you that doesn't watch for 30 seconds. YouTube doesn't reward you for that. So if somebody watches for 30 seconds and stays for at least longer, it counts as an engagement to a YouTube video. And more engagements means more impressions, means more new faces. And I've been seeing newer faces every day. As a matter of fact, our stream has gone from 120 people to like 300 to 400 people in the course of a month. So every little bit helps. So I really appreciate it. Yeah, it does make me feel good. I invite him to come. And anytime he chats too, The YouTube algorithm gives you a rewarded score for engaged chat volume. So he makes you guys chat with him. We chat with him. Talks back. So that also improves. Yeah, like I say, the other day we had like 400 people in the stream. We used to only have like 100 like 2 months ago. I love it. So I really appreciate you helping me out, man, because we're trying to grow our room, buddy. Every little bit. So hedge pressure, last one. Looking for 595. Nobody said retail trading is moving the market. You're an idiot. Majority of market moves on large institutional positions. Asset managers, hedge funds, 401ks, IRAs, pension funds are the majority players of the S&P market. You can see that commitment traders. Here's a piece of information that teaches you that. The majority of owned long futures contracts of the overall open interest of futures, the largest category of reportable CFTC positions is 1.1 million contracts, which is held by asset managers, which is like 401ks and pensions and things like that. Those are the people that move markets. You know who puts money into those things? You and me, with our salaries from our day jobs. So they move the market through the money that we as retail traders give them. So that's the largest position. Like you can say, like, here's market makers is red, minus 879. Long only, that's you and me and everyone's 401k, everyone's IRA right here. That's the biggest absolute value of all those. That's the biggest category. Hedge funds only short 350,000. That's who you said moved the market. As a matter of fact, that's the smallest category. So you're wrong. They're actually the smallest category and actually contrarian to the market. Naturally, a net short in the market's always gone up. So this is who moves the market right here. Right here. Who contributes money to these asset management funds? Retail. That's nearly the overwhelming majority of money in those pots. 401ks. I think more than 50% of the asset management pool is owned by T. Rowe Price, if I were not mistaken. I haven't looked at that data point since 2020, but that's one of the bigger 401k pools out there, the biggest one. Teaching the definition of aggregate. I don't think I could teach this kid anything. He's 18. Hey, I have a question. Mike S. At 18, where did you get all your information from? Where'd you get all your information from? Are you even old enough to have a trading account? That's my question. Wait, did this guy just say market makers don't buy options? Is that what he's saying? They aren't taking on risk buying options? No, market makers aren't taking on risk buying options. What? Yes, they buy options. Who do you think writes an option when you buy one? No. I feel like Mike has a trade room and he's really in his 40s. And he probably sells some algorithmic trading thing or indicator thing. And nobody buys it for good reason. And then he's here. It was alone. Nah, he didn't buy our stuff. But I like to think an 18-year-old knows everything about how market maker works. Who taught you? Who taught? I just want to know who taught you. It's not like, so at 18, guys, the guy he's worked for 20 years at Goldman Sachs. He's here to teach you in between recess and dinner time when his mom's not yelling at him, everything about how market making works. And honestly, let's just buy his class. He has a lot to say. I'll buy it. So, do you understand what liquidity provision is, right? Do you know how liquidity is mobilized in the market, right? Anyone that engages in liquidity providing can have the option to take on whatever risk, as in zero risk. They get maker taker fees to trade the market, and therefore they get paid just to provide liquidity. And therefore they can balance and offset their position, their positional risk anywhere they want in the market. I learned a lot of what I learned from friends of mine. I had some friends that worked in that area. That's where I learned a lot of my stuff from, reading and learning from people that worked in that area. How can we get back to you? We don't know your real name. Can you give me your mom's number? Wait, I know. I think I have it. Oh, I'm so funny. He must have got a job at Goldman Sachs when he was 12. I bet you so. All right, here we go. MHP coming right up. I'm just going to take this trade. No, more like 40-year-old with a trade room. It's always the same thing. How do I say calm center revenge trade? Well, I just know where I want to enter, and I usually just make sure I wait for it. So I have a real high probability setup right here to take a long from here to here. There's a nice little scalp that I usually like to take. And I just wait for it. Jake, I think, did I mod you yet? I need to make you mod. That way you can have fun removing weirdos. There you go. Jake, now you have the power to put people in timeout. Enjoy. Anybody else want to be a moderator? I'll bestow the power onto anyone else that wants a ban hammer. Neil, let's go. All right, hold on. Wait. Neil, all right, got you. Hold on. So what I find is interesting is that, you know, like, one can argue that who knows, like, whatever, you can say whatever you want. I just a couple months ago won a trading contest with like 1,500 trades, and you don't just luck into that. Even if I'm the worst trader in the world, I have enough skill to beat 300 people. That's enough, worthy of at least, anything. And that's what I have to say is, I go out there and trade what I say I do, and I won a contest with it. So whether it means anything to you or not, that's you to decide. But I got the proof. I mean, it's pinned on my Twitter. So sign me up. Glenn, I got you. Let's go. Who else? Mod power for the win. Whoever. Jack, let's hammers. All right. Couple more. Opening at the, so yes. So one of the setups that I do have is I do long at the opening price. When this resilience number on the S&P is greater than 0, I will long the S&P. With this kind of action that we have today, here and here are probably the two appropriate long setups. I'm thinking of longing here and adding here. But I might just wait to see where we end up. But yeah, here and here is a great setup. Both of them. And I'm deciding on if I want to. Now, outside of DD bands, I only take long, strong pivots only outside of DD bands. So the strong pivots that we have outside of the band don't qualify the open. It's a good pivot at the start of the day, but the strong pivots I long off of are going to be MHP and bull zone bottoms. And if we get those, I'll do them. Oh, wait. Who else wants one? Yeah. Wait, hold on. Glenn, I got you. NQ chart here. Oh, IDoc, if you're here, I just got your text. I saw it a second ago. Oh, he's back. Hey, I got a question. I really do have like a question though. So we can agree on something. It's a series of yes and no questions. You ask me a question, I ask you questions, right? Okay. So, question number one. Question number one. I'm just gonna start like the last, and again, I always share recent activity, but is this real or fake? What do you think? I'm gonna ask you a question. Fake, Korea, real or fake? No, the guy, the trader guy, the guy that keeps talking, gonna debunk. Is that real or fake? It is real. Good. Okay, hold on. Just question. Okay, that's real. Okay, cool. Is this real? Is this real? Does Elite Trader Funding make this up on their website? You can go see right now, but is that real? Yeah, it is. Okay, cool. So, okay, well, I just made like a, okay, hold on. I got a funded account. All right. Here's my top step. Hold on. Here's another one. Hold on. Where's it at? All right. This is from Top Step X platform, which you know. Is that real? Is that real? Top Step. I tweeted it. Like here. Top Step leaderboard, blah blah. Is that's what Top Step X looks like, right? So that's a. Yeah. Okay. Is this real? Did I get promoted to have a live funded account with Elite Trader Funding? Is this real? Is this certificate they gave me real? Yeah. Okay. So all right. So again, these are my accolades since November. This is like the last 2 months, right? How about the deposit from my Elite Trader Funding? My first payout from them trading like 3 or 4 weeks. 3 weeks. Is that real? This is from my bank. And that's all this is tweeted, by the way, in public. Is that real? It's real. Okay, so cool, right? So whatever you have to say, even if you say everything I do and everything I say or everything, whatever is bullshit, I only use this for all that real stuff. Top Step leaderboards, payouts with ETF, live account winning contests. I only use this. I use nothing else. So whatever the case may be, I'm just the world's luckiest motherfucker. And that's the case. Then I'm lucking myself into all kind of stuff and I'm loving it. That's great. Yeah, but I'm not trading XFAs and funded accounts. With Elite Trader Funding is a real money account. It's real money. They gave me real money to trade with. It's a K1. It's a real trading account. I was promoted above the funded world or whatever. I promoted to the elite level, to the here's real money. As in your skills were proven to us. Here's real money. I don't belong to that world, yeah. No, but yeah, but apparently they made the decision based on my profitability with them. So I guess they thought it was good enough to give me their money. Last analysis. I'm waiting for a pullback. I get long on for the day. Okay, so what kind of diapers did you wear 5 years ago? I want your 5-year history too. Were you still in Huggies? No. I'm going to compare 5-year history. Were you still wet in the bed? I just started with Top Step. So I want to get on leaderboard, but that's gonna be my next focus after I get through ETF and some Apex stuff first. Oh, there we go. How close are we getting? Nice job. No, when I get on the Top Step leaderboard, he's going to come over here and tell me that there's still more I need to do. So I have a question. Last thing I'm going to say, because you're here every day. Whatever your name really is. Have you ever won? Let's just do the last one before I get out here, because I gotta go. We got stuff I gotta do. Okay. All right. Mr. 18-year-old. How do you have a trading account? Did anyone give you a trading account like at a funded program? I'm just asking you. You got a lot to say. Did you ever are you funded with anybody? Patrick, whatever his name was. You're funded with MFFU and Top Step. Yeah, but you're not funded. You're still in the SIMDA funded. Don't difference. You're SIMDA funded, right? You're XFA and SIM funded MFFU, right? Are you actual live funded with Top Step? You are. Can you tweet it? Can you tweet us any evidence of that? You have a Twitter? We'll look at it. You certainly have something to say. Let's take a look. No, I'm saying go tweet it and post it here. We'll all go look. Post your history, because you seem to have a bunch of knowledge. And if you have a lot, if you're making a lot of money, I'd like to learn. Just tweet it or something. Dan, what's up? 9:30 every morning, or more like 9:15 every morning. I agree with Ice Wild. I'm looking for this today. I'll leave the kid alone, and he's still doing trader funding programs. You know, that's like every new person in the world. They think they got a lot to say, but you know, good luck to them. See, it's one thing to make money, but it's another thing to like win a contest. It's another thing to show, you know, lengthy amounts of, in contests, there's added pressure. I live streamed the contest, there's added pressure, and I still won. It's like, and I actually had a 2-week, almost 10-day delay. Everyone else got a 10-day head start and I still won. I mean, it's not like you luck into that. It's not, it's just not luck. But like, I like to say everybody out there thinks they have something to say. And that's why, you know, that's good. That's good for life. Appreciate you, OR. Thanks, man. Appreciate it, man. No, there's like one kid that shows up every day. I don't even know if it's a kid, but makes 50 dozen. They ban them, comes back, ban them, comes back. Literally an obsessed weirdo. Just coming here telling everybody how good they are and stuff. I'm 18 and I have a funded account with Top Stuff. Like, oh, that's great. I mean, that's like, you know, hey, some people like to celebrate their first win or two. I mean, I remember my first beer as well. You conscious the new 4-hour candle hasn't made a top wick? Yeah, I think inside of here, I'd like to see this hold. So I'm not too against seeing that right there. I think maybe here. Well, yeah, what's up, Blake? Good to see you, bro. Yeah, that is another thing on stream. You have to actually overtrade. People get mad at you when you're not doing much. You're like, do you even trade? Blah blah blah. And you're like, yeah, I do. All right, let's throw one in. I'll double down at orange. Just want it open. I'm gonna long here 1. I'm gonna long here 3. Stop out there. I only should trade small trades outside of the bands anyways. So be very cautious watching today, making sure that this doesn't zip down here. Trade it back up to there. So we'll see if this is a nice little dip to buy. You have one day to make 1,200 on eval account. Oh, are you in a fast track? I just got something small on this one. On QQQ, the problem is the bigger long setup I have is from here. This is the strongest for the longer haul. This is just being a little advantageous just with one contract. If I stop, I'll stop and I'll take another one at MHP. But I think we're so close at MHP on SPY that that's kind of like what I'm looking for. Res is still good. So at least I usually take a stab at open, but like somebody said earlier, I usually wait for the stronger pivots here, which is why just about right here, I got in on one, something small. Waited all day for it. All right, 5 minutes. We got the new hour starting. Just a little bit. My risk on this one is roughly 500 to 1,000. Not too bad to double in on this one to get. I want a bigger trade from orange. So I'm expecting I might take a little bit of drawdown here, but my real trade is my good ones from here. Just one in case it does rally out at the 1 o'clock candle. We start in about 5 minutes here. Waited all day for my dip. Oh, so trading with Dan and Rocket Scooter. So for equities, our our equities candles, so that you guys can have a more affordable platform. We don't buy all the exchanges worth of volume. All that matters is the current price. So you're gonna see that some of the charts are gonna have less, essentially just because we don't use price for anything here. We just, the charts are a little more like a formality. That way you guys don't have like a really expensive platform. The actual, if you compare our data to someone else's data, we're gonna have less data, slightly less data. So like the bottom wick and top wick of historic candles will be slightly different, just slightly. In futures, although you get real-time futures data from a broker, it'll be exactly the same as real-time futures data. And it was a cost thing for our platform. So the minimizer overhead. And less like basically like less strain on the platform. So Dominic, I can't advise you on amount of money you need to trade. So that's something like any financial decision or trading advice I can't legally advise you on. Oh, y'all have CSD? Oh, CFDs in the UK? Yep, you do. So I got in small here. My bigger setup, hopefully, if I get something good. Slightly lower. So we pay for data feeds, but whenever you buy a data feed, you have to choose which exchanges you buy. And with equities data, there's so many different exchanges. There's not just New York. So you can buy all the exchanges or just buy enough of them so that you have an idea of where price is trading in general. And it's like a cost thing. That way you guys don't have to spend enormous amounts of money in data. Neither do we. We don't buy all the exchanges because we don't do technical analysis here. So it's not needed. Just seeing like kind of where charts are going to be is what's important here. Yeah. Just enough to get you by. All right, now I'm looking for my second entry point. Like I said, I just got a small amount right here. Something small. One more here. Something small. I'm going to add in right here at the bottom. Most people are just getting started practice with prop firms. That's like the quickest and easiest way to get started. I gotta wait it all day for that dip, and hopefully we get a little bounce here. I'm gonna add right on that next little candle lower, 60, about 60.16. Ratios are good, everything's looking good. Monthly hedge. Yeah, I'm gonna wait on this one right here. I think I'm gonna add anything else to it. I think I'm just gonna take it or leave it just at one, just to get a one spot if I can go. I don't want to take a lot of risk on this trade. So that's it. I'm gonna wait on this one and see. I still need to finish eating my breakfast. I mean, I've streamed a lot longer than I should. I normally don't stream this day, but I have to get ready to go to a Zoom call in an hour. So I'm gonna hang on. I'll stay on this trade probably till the end of the day. I'll let you guys know. No, I only usually just trade one contract, and on the DD bands are higher. I don't usually go heavier than that. All right, Zoom call in about an hour, you guys. So I'm gonna eat my lunch real quick, take it easy, and we'll be out. So everybody go to the Discord. We'll see y'all on Zoom. I'll fill you in on this trade. I'm gonna look to lose about maybe 1,000, 1,500 most. I'll let you know on that one. So we'll see y'all in just a little bit. I usually only stream until like noon, so I'm like 2 hours later than I normally do.